Good morning, folks. How are you? If you are a subscriber to my Twitter or X, if you could give me a 5x5, let me know that the audio is good. Thank you, folks. Appreciate it. All right, so we're going to be doing some things today that hopefully will inspire you to be more involved with your price action study and a proper use of your demo account. Okay, so I'm going to teach you a price action drill that will help you also understand how to use limit orders, Caleb. And for anyone else that has not ever grown comfortable using a limit order for your entry, they're, in my opinion, they're the pinnacle of knowing what you're looking for. So having a market order, I do that market order entry mainly to satisfy, to the best of my ability, the folks that would watch my recordings like I did last night. I traded Asian session. I'll review that trade, by the way. Actually, that's the first thing I'll do after I'm done this little monologue. Okay, we'll go right into that, and then you'll see what I do and why I do what I do on TradingView, and it'll all make sense in a couple of minutes. But the market order that I use to enter and always add, and pyramid my position up is to showcase that I'm not using market replay, and I'm always highlighting and hovering over top of the little green button up here. And one of my students made a point about how they themselves, even as a paid student, were like, can you remove any of the doubt, because you could be using market replay. And I'm like, I wasn't even aware that market replay was a thing. But I started showing this little status button here, and I always toggle it so it tells you how much time is left while the market's open, and you can't pull that up when you're using market replay. So I don't generally use market orders to get in. I do that to allow for my entries to be a little bit off, not as precise as they would be if you were using limit orders. And we'll be looking at that today. Okay, so there's going to be a whole lot of button pushing today, buying and selling, buying and selling, buying and selling. It's going to be a lot of it, and it's meant to show you how I got over the fear of selling short. I had to desensitize myself, to getting into a short position because I didn't understand how to do it in the 90s. I was afraid to do it. Didn't make any sense for me to sell something I don't own, and how can I buy it back when I didn't own it in the beginning? So it was very hard for me to understand it. And what I tried to do was I tried to create a game out of it, and it was something that I would do on paper. So I'd have to write down what my hypothetical entry would be, and where my hypothetical stop would be, and where my hypothetical take profit would be when I would use end of day data back in the 90s when I first started trading commodities. And I would go through and back test every example like that. So my hypothetical fill, not factoring spread, obviously, I would always use the opening price of whatever candlestick I was using for like a bearish order block. I would use the opening candlestick's price, and that would be where I would try to sell short at. So for back testing purposes, that's what I would do. Now today, all of you have the luxury and benefit of having more resources to trade in a practice account where you have live data formulating and creating these individual candlesticks dynamically. So you're seeing something that, like people like myself and older than I am, where we were literally using paper charts that we hand drew individual candlesticks. Like that's how we did it back then. So I'm going to show you how I have taught my private mentorship students and how I would teach individual one-on-one. So when I used to do, long time ago, when I used to do one-on-ones, this is how I taught my students how to desensitize themselves. Because do you ever fear getting into a trade? I mean, chances are you probably had that feeling before, where you feel confident that you know where the market's going to go. You feel confident that it's about to do that move where you think it's going to run to it, but you're just reluctant to push the button. You're just afraid. And I had to overcome my fear of being short. Now, as a buyer, because that's predominantly what I was doing in 1992 when I first started, I could just go in there and just buy because I didn't care. I thought that everything was going to go up based on the indicators I had. So I didn't have any fear whatsoever. Even if I took losses and even if I blew accounts in the 90s, it's something that was not as scary for me as it should have been, because my desire to get out of the rat race, my desire to learn how to do this consistently was overwhelming by contrast to the fear that I would have had and at the time experienced. Because it wasn't like I wasn't afraid. I was afraid, but it was so small in comparison to my driven passion to get the hell out of the rat race of working, because I worked a lot of hours and worked 6 days a week. So every waking moment, every chance I had to study price, to study the markets, I was pouring myself into it. But I still had an under the surface fear of entering trades. Like that was there. It was magnified extremely, almost to the degree of paralysis, when it became time for me to want to start being a short seller. And I had to do that because the market was changing and it was going into bearish conditions. And every time I would try to take a long, it would slap me down. And if I'm only going to be a perma bull, meaning I'm only going to try to be a buyer only and never try to be short selling, either I'd have to sit on my hands a whole lot more than I was willing to do, and or I'm just going to have to concede and say I'm not going to be profitable and I can't trade. And that wasn't going to be the case. So I had to go in and look for ways to uh, do what my mentor Larry Williams said he had to do. He just said he just took trades, just kept pushing the button, and he didn't care whether he made money or not. So I was like, I'm going to try that. I'm going to try to do that and desensitize myself. And it wasn't easy. It was very difficult to do that. But you have the benefit of having a demo account and a paper trading account where you can do actual executions. Like I'm going to show you today. Like we're going to do a lot of them today. I want to remind you that these are drills, okay? This is to, number one, teach Caleb how to enter with a limit order. And those of you that don't know how to use limit orders to get into the marketplace so that we can get really good pricing for your entries, for your longs and your shorts, you're going to learn that today. It's a very short, simple little process. But I want to remind you that what we're going to be talking about and what I'm going to be pushing the button on today, they are not meant to be viewed as trades, okay? These are not Robin's Cup World Cup entry type trades. These are not the entries that you saw last night. These are going to be simply going in and trading off of intraday volatility. You're going to see me lose trades today, okay? It's going to happen. It's not the point of making money today. It's not the point of being accurate. It's the point of you seeing how to practice engaging price action. And you do this every single day for weeks up to a few months. Every single day you should practice it like this. I still do these types of things. Even though I can trade with real money and make real money, I will go into the demo account and paper trade these drills. I'll do it several times a day whenever I'm bored. It's like a form of meditation. I'll go in and I'll run executions. I'm doing it because it keeps me fresh. It keeps me tied into the marketplace. It's the first thing I do when I come back from a vacation. It's the first thing I do when I come home and we've been away from the home, or if I've taken a day off, or if I've been sick, if I have just had a longer time away from price action because of some kind of economic counter that said, this is not something I want to be a part of. Typically, it's a non-farm payroll week. I teach my students this very week we're working in here, you want to be done trading by tomorrow at 11 o'clock. So If you haven't made your trades in the index futures by 11 o'clock tomorrow, my students that are brand new, not the mature students, not the ones that have learned their model and know what they're doing, the brand new students, the people that don't know their own model, that don't know their way out of a bad situation in the marketplace, they are the ones I say not to trade on this week, Wednesday, Thursday, and Friday. You absolutely can use my concepts to trade after non-farm payroll. You absolutely can trade after the 8:30 news event on Thursday, which is a preliminary adjustment on the employment data from the previous month. Those 2 days, Thursday and Friday of non-farm payroll, they're very manipulated. But if you know what you're looking for and you're well versed and you're mature, you've not just recently started watching my videos, then yeah, you can trade those days. But when I talk, I take this idea of, you can hear my puppy snort again. Hang on one second because its scalp's getting really loud again. Hold on one sec. Little lumberjack here. Hold on one sec. Sorry about that. Had to grab my glass of OJ. I forgot that I was on the counter. So we now have to get up to get that later on. So these drills today, okay? I'm going to type it out on the screen very obnoxiously in bold because I absolutely know that trolls are going to take these portions of the video and they're going to say, see, ICT can't trade. See, ICT can't find a winning trade. See, ICT can't do this. And they're going to take it out of context, okay? I want you to understand the purpose and the premise of today's live stream. It is to teach how you can overcome fear of entering into a trade. If you do this drill every single day, 15, 20 times, at minimum 10 times a day, okay? And you'll see by using smaller time frames, it's very easy to do it. You don't need a whole lot of time invested. I did the drill with my students the other day for like an hour or so, and I did 10 of them. And I didn't know, let's be honest, I did 9 of them. I had to come back later on at the end when I said I was finishing the session. I wanted to round up to an even 10, so I did one more exercise of it. But I would enter a trade. I would show them where I was in the trade, where my limit order would be to take a profit, and where my stop loss would be. And I did not care, absolutely did not care about any predetermined bias. I was literally working with the intraday volatility in Asia of all sessions. It's not even that typically is a session that's volatile. But when I do the trade review that I did for last night's example on Twitter, I'll explain why and how you can start looking for Asian session moves, because I'm sure that's probably come up in your mind, like how do I know when these sessions are going to have these types of runs, and when do I try to avoid them predominantly? I'll cover that today. So I could have added that to the title, but I'm not sure if the title would have fit if I would have said everything I had in the label, entitling it saying limit orders and volatility pinball drills and how to trade Asian session. It's a long-winded title. So um, I think the title is enough to intrigue people to want to click and listen to it. They're probably not liking this big long monologue, but that's just the way I roll. And if you don't like it and you can't sit through that kind of stuff, I'm probably not going to be the right mentor for you. But go use somebody else's, use somebody else's methods and stuff, lose money, and then come back and you'll be more prepared to listen. So as a reminder, you're encouraged, if you're watching it live, okay, because it's going to be interactive, it's going to be an interactive study where you're going to feel what it feels like to be in constant buying and selling, and executing with limit orders, placing limit orders as an exit. And you're not using a market order. You're not allowed to use a market order. You're not allowed to save the stop loss. As soon as we put it on, it has to get stopped out or it has to go to the limit. So one of those orders have to happen. And what you're going to be doing is you're going to record and journal what it feels like for you watching price either pan out to the target or getting stopped out. It's really important for you to write down what you feel. Now, I'm going to tell you right off the top of the list, what's going to happen is it's going to feel weird that I'm putting these trades on with no real logic except for where's the closest buy side and sell side on a very small time frame. That's all this is. This is not a trading method. One of my students in one of the user groups was like, can we turn this into a trading model? Because I made like $3,800, $4,000, back and forth. And I showed losing trades too. So I want you to think about how if you can look for small, tiny little microstructure liquidity pools, and you have just small risk involved. You're only going to be using one contract. You're not allowed to use two. You're not allowed to be pyramiding. This is not what this is about. I'm going to teach my son pyramiding in this mentorship. So that way he has the lessons and you also have the lessons, okay? But for this purpose today, we will only be seeing ICT do one contract. I will be buying and I will be going short. And we'll do this for a length of time until either I get bored with it or I've accomplished the method, which means that I'm going to have to at least do 10 of them. So we're going to spend some time today looking at intraday volatility. I am not trying to frame a bias. I am not trying to go into the charts and say, here's what I think the draw on liquidity is on the hourly chart, the daily chart, the weekly chart. We're not going to refer to that with the drills. Okay. It's literally going to be a 15-second chart with a 1 minute and 5 minute basis. Okay. So when it's something that I can use on a 5 minute chart, I will show it to you. But predominantly, I'm going to use a 1 minute chart. It is not underscore. It is not. And when you see people go out there making YouTube videos, okay, or they're showing on social media that this is a model for trading, this is ICT's Enigma. It's not Enigma. Okay, it is absolutely not Enigma. My private mentorship students were asking if this was Enigma. No, Enigma doesn't lose like this. Okay, this is a drill. This is to accomplish getting over the fear of executing and entering. It's to give you a baseline evaluation and foundational read on you internally. What are you feeling when you're in these types of executions? Are you emphasizing the need to be right? Because that's a problem. Are you emphasizing the desire inside to close your trade because you don't want to get stopped out because that means you're wanting to be right? Are you fearful of having losing trades more than a winning trade, but still being net positive? That's a problem. So all these things are going to help give you a baseline evaluation on how you think. But it's also going to train you how to use limit orders properly because there's no more market orders. Market orders are just for me to prove that there's no market replay being used because in the upper left-hand corner, when you're using market replay, you don't see the buying selling buttons up there. They put them down here in the lower lower right hand corner down here. I don't have the luxury of doing that with live data. I have to use the entry buttons up here, and that's why I do that. But when I'm trading with real money, I'm trading with limit orders. The only time, and this is I got this from my mentor, the only time you have my permission to use a market order is to get out of a trade that you absolutely know you're offside on or it's about to turn on you. Just completely close it and do market order like that. Done. Simple. Because if you don't know what you're doing, It's going to be illustrated with you constantly just using market orders. And if you don't know what you're doing, you're going to be trading without a stop loss. So hopefully after today, you will not be fearful of showing your examples without a stop loss, where your trade's still running and it has open profit and you want to show everybody that because you want a dopamine hit. Stop doing that, because you're actually you're teaching and training your body and mind to anticipate some public reaction and response to support you. I share these examples like I did last night because number one, I think that it's helpful to see the logic that I have, also introducing something that's a little bit more advanced. And like I said, I'll cover it. I'll actually teach you what the Indigo entry method is. But it's a slap in the face to supply and demand. So what it is. And the idea of you getting into a trade, how you overcome that fear, I'm teaching you how I did it. Nobody taught it to me. I didn't learn it in a book. I was just passionate about getting over it because I was tired of being afraid of it. I wanted to do it. I knew I had to learn how to be a short seller. And this was my method of accomplishing getting over that fear. Maybe you don't have the fear of getting into a trade. Maybe just you don't have that fear. And that's great if you don't. That's wonderful. But eventually, if you start trading with size, that means you're trading with more contracts behind the position, or lots if you're trading Forex. You're going to have that fear come in. It's going to happen. At some point, you're going to hit a threshold where, okay, yeah, I could do one contract. Yeah, I could do 5. I could do 10. Wait a minute, 20 you said? Wait, 50 contracts you said? Ugh, I don't know about that now. That's a little scary. You'll eventually hit that barrier where you're afraid. But what you'll have to do is lean on your experience. Well, some of you that are brand new, you don't have any experience to lean on except for just clicking a button on the demo account with no understanding of what you expect to see. You just want to find out what happens when you do it. That's a waste of a demo. That's a waste of your time. You're actually giving yourself bad habits, toxic thinking, and you're anchoring the expectation to the result of the trade versus, am I following a process? Am I following a methodology, a model? Am I doing something that with probabilities and statistical results that I can measure in the past? That's back testing. Am I following something that I can trust in regards to sticking to this and then trusting that the outcome will be favorable for me over a period of time, not just the next trade? So it's important that you understand when we start doing these drills, when you're watching me do this, you're encouraged to do the same thing. Now, jacklegs out here are going to be trying to do the opposite. And they're going to say, see, this is the trade ICT was taking, and this is what I was doing the opposite. We're doing nothing about a competition today. That invitation is still open, but that's not what this is today. Today is just teaching my son how to get in with multiple executions, and then it also helps you read price action. And if you journal every single session you do like this, like in your progress of journaling, my advice is for you to have either a 3-ring binder if you want to be like me, which is high touch over high tech, or in your high tech devices where you're journaling, have a section for price action drills where you're literally going in and doing what I'm going to show you today. And then what you'll do is you'll have a first day of doing it, baseline. Now, you can't take that today as your experience for you because you're encouraged to mimic what I'm doing today. So you already know that this is not a trade signal because I never tell you to take a trade. I don't ever want anybody copying me because it gets under my skin. Like I don't want someone to be able to say that they took the same trade. And when I see people say, oh, you took the same trade as I did, or I took the same trade as you did, and you didn't show me your execution, you don't see your executions, and you ain't proven that you need market replay, I'm not going to like your post. I'm not going to heart it. I'm not going to comment on it because I don't believe it. And nobody else should believe it either. So because I'm very guarded with my executions because there's nobody out there doing them like mine. I have students that can trade well with my concepts, but they're not going to have my executions. They're not going to have it. So today you are encouraged. You're absolutely encouraged to mimic everything I'm doing. I'm going to walk you through it so that way you'll be able to put your limit order in before price gets to mine. So it's not going to be like you watch mine get filled and then the delay in the live stream that you can't catch up or keep up with it. You're going to have plenty of time to do everything I'm willing to do in front of you today. Okay. My goal is not to win more than I lose. That's not what The procedure is not based around that. Okay. Before we're done in 2024's mentorship, before the end of this month, you will see me trading live. It'll happen in front of you and it'll be with the context. But before Caleb can do that, and before we even get to that point, I want to at least bridge the gap between not knowing how to use the limit orders, and it's what he has now, and also how he should practice. And because you're all eavesdropping and listening, watching and training with him at the same time, you're getting the experience just like he is. And sometimes if you're here live, he watches the video after the fact, and you have the benefit of being here live. So you actually have a little bit more advantageous position than he does because he works. And his schedule doesn't afford him to always be watching the stream live or sitting next to me. So hopefully I've beat that to death enough to know that when I type it on the screen, these are not live trades. These are not something to be profitable on. It's simply to desensitize yourself. Desensitize yourself from the outcome of the trade and just keep doing the entry mechanism. That's all it is. It's to practice that. But when you start journaling and you log them every single day, at the end of the weekend, you should look at what you're doing in your practice sessions. And what's going to happen is your eye is going to start jumping to setups that you keep seeing repeat doing this drill. And what will happen is you're going to see setups that you've never noticed before because you have either got stopped out in this drill exercise and you watched it pan out in the opposite. And then it illuminates that idea. Wait a minute, I see that. And then what you'll do is by like a default, your subconscious will jump to, this looks like the last time I saw that. So now I'm going to do the drill going short, not go long. And then what will happen is you will start seeing a progress where in the beginning, you're probably going to have a whole lot of red losing executions. And it's not to hurt your feelings. It's not to make you feel bad. I'm certainly not going to be embarrassed today if I have losing trades. That's not the point. The point is you're getting experience pressing the button and you're giving yourself a baseline evaluation. But you can't take today's data as yours. That's you just copying me. And I'm going to have losing executions in this. So you can't look at that and say, I did something wrong. And you can't look at the ones I do right and say, I did something right. Speaking of yourself. So it's me doing it, but I'm asking you as the viewer to do the same thing I'm doing. But you are to write down what you're feeling when it happens. Are you embarrassed for ICT the mentor when it gets stopped out? Are you encouraged when it works in your favor? Are you trying to make it out to be more than it really is? Are you trying to think that this is some kind of a new model that I'm leaking? No, this is not a subliminal signal service either. Okay. All it is just an exercise and a drill that I encourage all my students to do this every single day. If you can do it multiple times, like if you can do it in the London session, the New York session, the lunch hour, and the PM session, do it. You have no excuse why you should not be practicing. Every single day, you should always practice. I've been doing this for a long time, and I still practice. I absolutely still practice. Tiger Woods still goes out there and he practices his drives and his putts. I mean, think about it. You gotta keep the skill fresh, and in price action, it's no different. So it constantly keeps you tied into the marketplace. So I'll give you enough monologue. Let's get into it now. The daily chart here, it has a lot of annotations. I apologize, but we'll get to it. Yesterday during the live stream, I talked about how on the weekly chart, this was a potential draw that opened up the week for me as a initial bias where I wanted to aim for something in that direction. And I also mentioned there was a small separation between the body of this candlestick. Let me take these drawings off just for a second again. I apologize. And again, this is a daily chart for NASDAQ, December delivery, 2024, daily. And this candlestick's body to this candlestick's body, that separation between the open of this candle and the close of that candle, that is by definition a volume imbalance. If, and this is something I had to come back and retouch on today because I didn't like my description of this because it wasn't sufficient. more accurately is when we have a volume imbalance like this, and then the candle that creates the first candle that makes the volume imbalance, like we have here, this would be candle 1, this is candle 2. If candle 1 has a volume imbalance to the left of it, like it does here, and the body is inside of this candle and this candle body, as we see here. In other words, this candle's open, this candle's closed. The candle in the middle, its body is inside those 2 price points. Okay, this is a very specific PD array. I'm not going to tell you its name because everybody's going to go out there and start making books about it. But I'm going to teach you something else about this very particular PD array in a book. You don't need to buy my you don't need to buy my books. Okay, once the books are in print and they're in circulation and people can have it and it has an ISBN number attached to it, I will talk about those things on my YouTube channel. So again, it's not a pitch to buy my books. I'm not going to get rich by you buying my books. I'm only doing it so we can put it in print form, in its true form, because a lot of people have already put out my stuff in incomplete fashion, and they're going to look real stupid in a couple months when by contrast, their books are horseshit. But this PD array is inside of a volume imbalance and a previous volume imbalance. This candle's body has to be inside of the 2 candles surrounding it when it's surrounded by a volume imbalance on both sides. So as I told you yesterday, you would note that by encompassing the first to the second and then draw that out in time like this. Okay, so this is a specific PD array and we can use this information. Now I'm going to take that off and we're going to go back and add the drawings. And now in this area, I'm going to add it back like this. And then I'm also going to add the Fibonacci so I can put the quadrants on it, because we grade everything in ICT. Grading is where we take a imbalance or a price range and we put it in a measurement of where's equilibrium, the halfway point, and the quadrants within it. So that way we can anticipate. We're not reacting to some kind of thing in the future. We anticipate PD arrays forming around these quadrant levels. Oh, what does that mean? Well, you're about to find out. So if you put the fib on, the low to the high, and then you add the quadrants, and I'm going to thicken this up a little bit, make them a little bit obnoxious. ICT, something obnoxious from him? No. So we have this area that I mentioned yesterday in the live stream. Okay, and it's towards the beginning when we were still talking about the daily chart, so you can go back and find it. It's there. But this portion of that is something I didn't cover yesterday because I was trying to get through this stuff until we got into reading the real price action live. But now I can go back into a 1-minute chart. And we're going to go over to Asia last night. All right, so using the PD array that I outlined in live stream yesterday, not cherry picking, not form fitting, not trying to find something to justify, because ICT has something to always explain something so it can look right. It just so happens that I'm so fucking good that I look right all the time. That's the problem. It's a superiority complex for people. If you have that problem, it's something for you to work out. But here is the details. Here is the high. And before I did the trade, I went to my private mentorship students and I told them, I said, annotate 20,287. Now, that's no different from me being on Twitter when I used to go, note this level. So what I'm indicating is that's where my focus is at that given moment. I want to see, does the market provide me some kind of a framework? Does it run to a pool of liquidity? Does it run to an inefficiency that is a discount? That's what's implied by that. I have to see the setup form in price around the time of day that it should form. So if I'm anticipating, not reacting, if I'm anticipating a run to take out this liquidity, or just to simply reprice to it, which is all I was willing to do because I wanted to get to bed last night kind of early. And Asia, for the working class heroes like in the United States, if you can't trade any New York session because you're working, or you can't get up early enough for London because you have to go to work, and work prevents you from having sleep deprivation, or you're at work and you can't trade the PM session or the lunch hour in New York. So what does that mean? You're kind of like limited just to Asia, right? And today I'm going to talk about, this will be the last thing I'll talk about before I close the stream out, but I'll teach about Asia and when to anticipate Asia setups that you can go in and at least reasonably expect that you'll have something that you can trade and it's favorable. Not every single day in Asia is something good. Okay, so I'll kind of give you the talking points for that today and then close the stream out with that. We're going to be together here till probably 10:30. So like I told you, these are going to be the longest ones of all of the 2024 mentorship. But you want to learn? This is what it costs. It costs a little bit of time. So if you recall on the daily chart, this blue shaded area I drew out, that's what is represented by both of those volume imbalances. Okay, from the high of the box down to the low of the box. All these other levels in here are just simply levels that we used yesterday in the live stream and or mentioned where they came from, which is the new week opening gap, and obviously this is the new day opening gap here. Notice that in this price action in here, remember this is the draw. That was my interest. My private mentorship students know beforehand that this is what I was looking for. As soon as I asked on Twitter, do you need a dose? Okay, and that's like me asking, do you want to see me do a vignette? Vignette is where I actually do an execution, record it from beginning to end, and I put some kind of song at the time that I was either listening to or came to mind, and I put it on there, and it's kind of like, you know, it's my meditation, and some of you like it as an artwork, but I like doing it. But as soon as I said, you want to see a dose, I had several students say, I know you traded the relative equal highs. So that tells you they've been around the block with me for a while, so they know. So if we can see in that blue shaded box, notice what happens here. Price drops down from in here. They leave relative equal highs. So what are they doing? They're engineering liquidity. Why is that useful? Because they're going to come down to clean up these smooth lows. Now, I don't have the time when I turn the chart on, because I went to Telegram and told my group, I said, listen, watch the 20,287 level, buy side, NQ. And no, you cannot get in my Telegram channel. It's just for private mentorship students. I am not doing a mentorship again ever in the future. You cannot buy your way into the group. I am not giving them signals. I'm not doing anything that would make you want to get into it. It's just us hanging around individuals that are all like-minded, and I feel comfortable talking to them. I still have leakers in there. That's why I don't teach them anything extremely advanced. I come out in the public and then I ask them, do they have questions? I predominantly will use their questions in my delivery on the things that I'm talking about today and when I'm doing live streams. Sometimes I'll use somebody's comment in the YouTube comment section, sometimes, but they're only going to be the ones that are followers of the channel. If you're not following me on the channel, I'm not really paying much attention to your comment. So once I posted that I was interested in 20,287 buy side NQ, I was waiting for the market to give me something to run on. So that means I have to wait for the manipulation, and this was it. They create these relative equal highs and they drive it down aggressively. This area here, can you agree that that is absolutely too perfect? Like, this is a classic example that would be in every support and resistance book. John Murphy would have this in his book, Technical Analysis of Financial Markets. which is the Bible for retail trading. Every single one of you listening to my voice, you better have electronic PDF format or a hard copy of John Murphy's Technical Analysis of the Financial Markets. That book is the Bible for retail traders. And I am absolutely on the hunt for everything that's in that book. I want to be diametrically opposed to it. And when my concepts are arm wrestling anything in that book, my stuff's beating the living hell out of it, literally handing its ass to it. So to understand how a retail trader thinks, that book will help you. I am not telling you to read that book to subscribe to any of those views. Zero affinity for anything in there. Nothing in that book, zero, is useful except for knowing what it looks like through a retail perspective's mindset. So they will see when the market does this and it runs out. As soon as it trades above this high, what are they going to do? They're going to chase it. They're going to be a breakout trader. Okay, so how that would work is when the market was ticking like this and creates this little high, and as soon as this candle does that and closes, they're immediately going to put a buy stop order right there to buy on a breakout. When I'm reading price, I'm looking for areas where they have done that already. So here, their long entered. I'm sorry, their long has been entered on here if they use the buy stop. So in this little area here, which just happens to be also yesterday's what? New day opening gap, which is for today's date. That's why it's dated here, okay? The folks that are doing their trading view indicator, you have to use the date that's after the 6 p.m. Eastern time. Whatever that date is, 6 p.m. Eastern time, that creates the new day opening gap. You have to roll your date forward one day, and then you've answered the things that I would say that is now correct. So I can't co-sign anybody because they're not doing that yet. But because if you don't have them annotated, you're going to get lost in the sauce, and you can't do that. You have to know what your levels are. So retail would be long here, and they're feeling good about this because sometimes retail traders are in profitable positions. They don't necessarily believe, what I believe, but they believe that their indicators, their strategy of breaking out, buying momentum, selling momentum, that's the secret recipe, and it's not. You're just catching a little tailwind, but if you hold on to it too long, it'll turn back around on you. And what do? They see this, and it runs up, and they're hoping it's going to break out again here. They deny them. And anyone that bought on a breakout here, they're going to have their stop loss right there. So I have two reference points that I'm watching after I told my private mentorship group, 20,287. I want to see how it trades here. And if it's going to go below here, what can it reasonably go to? Well, this clear, obvious, actual gap. This is a common gap. Okay? So this common gap is in close proximity to what? The original onset or the inception of the move, which is based on what? 1, 2 equal lows. So retail sees this as what? Support. So if anyone that went long on a buy and a breakout here, initially their stop loss is going to be below here because they see this as protection. It's being defended in their eyes. Anyone that would have trailed their stop loss would be right below this wick. So I have to watch and see, how does price behave? Does it go down to this level here? And if it goes below here, does it careen through that and dive into this? Because if it goes into here like that, then I know all I have to do is wait for price to book underneath these lows. So when it does this drop down in here, it's not only just going below the lows, but it's going into the upper quadrant of those dual volume imbalances on the daily chart. Remember I put the Fibonacci on it? Let me scrunch up the chart and you'll see it. The low of it, lower quadrant, midpoint, upper quadrant, and the high. Remember, it's the two volume imbalances that I'm encapsulating on that daily chart. Listen to yesterday's live stream when I'm talking about the daily chart. I tell you that is how you look at it. Today, I'm teaching you how to refine that and get the algorithmic perspective of where the market's going to go based on those two individual volume imbalances and frame them logically. You're not going to find that in anything else. It's not anywhere else, okay? But look what the price is doing. Not only is it just going below the lows, but it's going right to the upper quadrant of that level. So I'm anticipating, listen, I'm fucking predicting, I'm not reacting, I'm predicting the future. I'm predicting where my PD arrays are going to form. Now watch, folks. Anybody that's watching with supply and demand bullshit in their mind, watch. Really pay attention to this because I'm about to smash that shit on the rocks. A demand zone means that there's some kind of buying that's taking place, some kind of propulsion higher that sent price higher, so they're going to react off of that when it gets back down into it. Well, that just goes right out the fucking window because now we're below these lows. So where's the demand zone here? We're below all these lows. We traded down here. See that? On the 1 minute chart, I highlight the volume imbalance right here as the down close candle closes but doesn't take out that wick. Listen, because this is not supply and demand. Sam Seiden, take good notes, buddy. Take some good fucking notes. That volume imbalance is the first thing I draw out. I know that once we get above, as soon as this candlestick closes, it opens here. My eye sees that volume imbalance as this candlestick's closing like this. In my mind, I'm thinking, I want to see that candlestick close just like you're seeing it close there. And leave that volume imbalance right there. That shaded, that little box, that little drawn out rectangle. I want to see that stay just like that. Because when it does this, I know that when this candlestick or the next candle after it would go up, it's going to come right back down into that level right there. Why? Why do I believe that that's going to happen, and why is it going to act as a discount array? Why should it be bullish? Well, the liquidity over here has been purged. We traded down to an algorithmic price point where if I'm going to be accurate about anticipating, predicting how a PD array is going to form, when and how they're going to form, it needs to go to a level that I anticipate having a reaction at. See, I don't trust in diagonal support and resistance, which is like diagonal support trend lines, diagonal resistance trend lines. I don't look at the market like that. I don't look at classic support and resistance. I'm looking at liquidity. I'm looking at levels that you're not necessarily seeing in your chart. This level here, this quadrant level, none of you are going to see that. You're not going to see that. No other school of thought is going to show you this level here. It's not going to happen. That's not happening, okay? So I have tools, I have resources in my repertoire that afford me a visibility over price that none of you have. And I'm showing this to you so that way you can appreciate, number one, that it's not just simply a down close candle that makes an order block. And it's not a demand zone, because a demand zone would have some kind of anchor over here, and it's not. We're below the lows. That is not in supply and demand. And it doesn't just do a drop down into some random level. It's going to a level that I've outlined in a PD array that you saw on the live stream yesterday. Guys, stop with the shit in Telegram. You should be watching the live stream, not commenting. Now everybody's going to say, can I join your mentorship? No, and don't fucking send me emails. You can't join it. I'm not doing another one in the future. I'm teaching mentorship right now. In case you haven't noticed, I'm doing it right now. It's fucking free. Why do you want to send me money? Stop. I'm teaching for free. It's just relax and take notes, okay? So this down closed candle here has a volume imbalance over top of it. The Indigo entry model is a run on stops order block with a volume imbalance on top of it. Okay, that's the Indigo entry model. That's all I'm going to say here. There's going to be more things to it, but you already know what's going to happen. It's going to be on Instagram. It's going to be on Telegram. It's going to be in Discord channels. It's going to be on YouTube videos. And there's going to be some kind of a booklet put on Amazon before we get to next weekend. Okay, ICT's Indigo model entry. Stop that shit. Okay, because nobody's buying it. It's not going to be taught in entirety until it gets into print. But I'm showing you things that haven't been taught before. But it's leaning on logic that I've already introduced, which is what? There has to be one of two things happening for your entry. It's going to go to liquidity, which we clearly see, and I think anybody with the common sense can see that would be sell stops below these relative equal lows, right? I mean, it goes without saying. But if it's not going to liquidity to create the long entry, it's going to go down to a discount inefficiency, which is what? Here, that's an actual common gap. So in your chart, it could be drawn out like this. That would be a reasonable expectation, assuming that these relative equal lows were not there. Now, your question is going to be, well, how do you know not to buy in here? And how do you know they weren't going to just leave those relative equal lows there? Because sometimes you do trades and you short underneath relative equal highs and the trade pans out, or you'll go long in situations like this where there'll be relative equal lows and you'll get into a gap and you won't be fearful of getting stopped down here, because I'm teaching that breakdown to you right here. Okay, because we drop down like this and this swing low is sitting inside of that new day opening gap, that's already enough as a draw. There's several factors there for the price to at least want to get there. But if it's going to go there for the purpose of going below it for trailed stop loss orders, for anyone that's going long on a breakout here like retail traders would, to get below that, well, what's the first level? It would be the low of the new day opening gap, which is too insignificant for me. So what's below that? This common gap. Now, if this low would have went lower, then I'd be going long there. And it wouldn't be the Indigo entry model, or most likely probably wouldn't have done it. The Indigo entry is simply an order block inside of liquidity with a volume imbalance on top of it. Okay, so it's a culmination of several factors, but the main thing is it's going to liquidity. And I wouldn't have used this inefficiency here because these are too smooth. So if it's going to go below this low here, it's going to go into this gap, which watching it did. Then I simply have to sit and wait for it to get down into this liquidity. And once it did it, I want to see it touch that upper quadrant on those dual volume imbalances on the daily chart, which I told you about yesterday. Now imagine if I wouldn't have told you that yesterday. This would have looked like some mumbo jumbo bullshit, right? It would have been like some contrived, made up nonsense, right? And that's what some of these individuals that think that what I'm teaching has no validity because it hasn't been in any of their books. They don't have a hero to look up to. I'm an anti-guru. I'm an anti-hero. Okay, so I'm going to be divisive. But I'm teaching you the very things I'm doing that arrive at these stellar entries. And they're not linked to anything else. They're mine. They're all mine. And I'm lending them to you. Okay? You don't own them. So no, I wouldn't buy in here. I want to see this trade to it and through it. Remember, every PD array isn't intended to stop price in its tracks. It's not designed to do that. It's to give you intel about what to see in price action. If it trades below this low, I want to see it trade into this gap here and go right through it like a knife through butter, hot knife right through butter. And it does so. So it means I know I'm going to be waiting for it to trade below these lows. And then where and how far below the equal lows am I going to reach for? The upper quadrant level. And then if I get an order block, the down close candle, in this case, we had the volume imbalance on top of the order block. So I'm highlighting that in the video. You watch me do this. And then on the 30-second chart over here, which I'm not going to be able to do that here because you have to watch the video again. If you want to see me post the long version of that video of me executing on the YouTube channel, it's a little bit long. I just know that when I post them like that, even when people speed it up to 2 times the regular playback speed, I know they're not going to watch the entire run. And that's why I don't like doing it, because it's a waste of my time waiting for it to compress and then upload it. So that's why I also do it in short form version. I speed it up and I put song on it so it kind of holds your attention, because everybody has TikTok mentality. So I trick the viewers into thinking they're watching a 30-second TikTok, but because the music's playing, whether you like the genre or not, you're either bitching about the music choice I've made, or you're sitting there cussing at it saying, oh, you've lost 15 times. This is the one you got right. So I have to hold your attention on a video that's not monetized. So where's the logic behind that, right? So as price creates the volume imbalance and this candle trades up above it, I know that I'm going to see it trade back down into this area. Why? Why would I expect that? Because if you look real close, this is worth paid mentorship price, and you're getting it for free. Isn't that awesome? This separation between this candlestick's body and this candlestick's body, that's the shaded area I'm highlighting. This candlestick delivery does what? It drops and lays down a body. How? With buy-side delivery. See that? So when it does this, once the volume imbalance is created, and we're down here opening on this candle down here, it trades up. So what is it doing? It's laying down a buy-side delivery body. So now what does it need now? What does it need? Read delivery down into this area. Watch the executions. As it's doing that, I'm going long. And as it touches in the top of the volume imbalance here, I'm going long again. I'm adding. And then this gap, I'm watching, do the bodies fill in and respect that area as well? So watch over here. Look. It's missing buy side and sell side. The wicks, I ignore them because they do the damage. There's no body on this candle here. It's the open and close, the same thing. So I'm ignoring that entirely. My focus is primarily on the volume imbalance between these two. See that? So there are times when, using the rules I'm giving you, and they'll be black and white, true, easy to follow logic. It's not always just this. There's other things you have to look for. But a volume imbalance is not simply just using two consecutive candles. You have to look at the same way I did the daily chart. Think about it. Is it any difference here? No, because the body of this candle is the open and the close. So what is it? There is no body. The low of the candle and the high of the candle here, and then the open and close is the same price. So if we use the open or the close and refer to it as the body of that candle, is it still same thing you're seeing when I talked about yesterday, where you have a volume imbalance between this candlestick's close and the open of this candle? That's a volume imbalance. It would look like this. Technical science. See that? Volume imbalance. And then the other one would be this. Yeah, how about that? That's a volume imbalance. But I'm teaching you to don't even look at it like that. This is how you look at it for real. Okay, so the algorithm is ignoring this candlestick entirely and focusing on this. That's the reference point. That's the array it refers back to. And you can see the bodies. I'm sorry, the price action in here. We wick outside of it, yes. But look what this does. Hammers it here, comes back up, rallies away. So what is it doing? We have an absence of buy side and sell side delivery on the body's perspective. We have wicks in here, but we have an actual gap between this candlestick's low and this candlestick's high. So there's a real separation or a real common gap. That's not my term. That's just what it is generically. When there's no trading in there, that is a real liquidity void by definition. This is a liquidity void. Okay, this drop down is not a liquidity void. This is a liquidity void because there's no printed mark-to-market orders executed between this candlestick's high and this candlestick's low. So that makes this a real liquidity void or common gap. Okay. Well, if you look what happens over here, we have sell side delivery through that, and then we have buy side delivery through that. See that? Big, huge paradigm shift. Ready? Watch this. It's missing both buy side and sell side delivery between these two candlesticks points, high and low, respectively. Sell side delivery, think about that paint roller analogy. You have paint on your roller and you're applying it to the wall and you draw the roller down. So you have really good supply of paint in that little white shaded area. Now you're going to start rolling the paint roller back up, and you see that happen on this candle. You see that? So between this candle portion here on the down close and this candlestick right here on the up close, price has been offered both directions. It's offered sell side delivery and buy side delivery. This little area now has become balanced. But what can still happen with the wicks? They can do the damage. So you have to refer back to that volume imbalance in its true form, which is here. See that? Now, I already know there's about 90% of you saying, fuck this shit. This is too complicated. I didn't get the algebra. I quit school. I didn't even graduate. This is bullshit. I ain't trying to learn this, man. Fuck this guy. I understand. I'm not teaching precision to everyone. It's only for the strong. You want to take trades like I showed last night, what I showed here? Look at them. Look at those executions. You see any market replay up here? Okay. That was done with live data. Live, not Memorex. So some of you are like, what the fuck's Memorex? The delivery in between these two price points here. You want world-class trading? You want world-class executions? You can learn it from me, but it requires this. If you don't want to put this kind of level of work ethic behind it and try to study, you're never going to get it. You don't need this to be profitable. Don't mistake what I'm showing you here. You can make very simple bread and butter income and never, ever, ever go into this degree of technical science, and it gets further deep in the rabbit hole than this stuff. Like, this is still nothing. But if you want to go to the degree of world-class execution and seeing setups that the average bear in the industry isn't going to recognize or even anticipate, they wouldn't even know how to react to this type of trade. Like, they wouldn't even know how to do it. And I'm nailing it down. I'm nailing it down. You have to study what I'm teaching you. So the sell side delivery here in this small little white box, okay, what I'm talking about specifically is, see the top of the white box here? Look at where the black down close candle touches that upper portion of that white area to the lower area. That segment of the black candle coupled with this up close candle here. This portion of the white area, when it touches it and trades up to the high end of it right there, at that moment, this little area has become, what did I say? Has become balanced. But what can happen still? The wicks can do the damage. That means it can color outside of that white box. But look closely. Even though that we go back to that reference points of the actual volume imbalance here, my eye is watching all these things. I don't need to draw the lines. My eye is keying up on what I just showed you relative to this candlestick here and this candlestick here, which tells me that when this candlestick here opens and it trades down, I know that this is just a wick. It's not going to close down like that. It's going to open here, trade down, and come right back up, and then it closed high. Where's the body stopping at? It's inside of this little separation over here. It's on the high end of it. And then the next candle here, we open, we trade down, and stops dead in its tracks right to the tick over here. What's this candlestick's closing price? You're going to look up at this upper value here, okay? 20,229.50, so 29.50, okay? What's the low of this candlestick here? You're going to look right here. Look at that value. What's that candlestick's low? 29.50. To the fucking tick! To the tick! You awake now? Now you're sorry I got that audio fixed, aren't you? Oh shit, it's fucking delicious. So when we see it trade down like that, what is it doing? It's doing the damage outside of this area that's been rebalanced with this candlestick here. But now let's go back in and see what it's done. Once you understand what you're looking for, you don't have to have the annotations on your chart. Your eye will just go to these things. But see how the body stops and rests on top of that white box? And the body stays above that white box? It only does the damage to the downside, stopping out anyone that wants to trail a stop loss up if they're absolutely long. And think about it. Think. Watch the recording. As the market's dropping down with that wick, I'm buying it. Think. I'm not worried about that thing careening down here lower, taking out what you might think is relative equal lows. I'm looking at how it took the liquidity out over here inside of a macro. What? What? What'd you say there? What time is this drop? When's it occurring? We're up here at 8:10. So we're in the last portion of that 750 to 810 macro. So where's the liquidity? Well, what has just happened? We left these relative equal lows here. So on this candle, we start doing what? Spooling. Remember that I give you a time window. That means it's going to start. It doesn't mean your trade goes to target there. It just means that it starts to spool. Spool for what, ICT? What does that mean? It means price is going to run in a direction to a inefficiency above or below, and or to a pool of liquidity above or below market price. So what has happened at that point? Look to your left. Retail bought a breakout. Retail trusts these relative equal lows. They think that's support. So the macro is going to go down and cannibalize them. Stop. Draws right to my level, upper quadrant, dual volume imbalances on the daily chart. Dual volume imbalances on a 1 minute chart. Same logic, same things going on here, okay? But when it trades down and creates this down close candle, I want to be trading inside of this open to its high of the wick. This little area in here, that is my order block. That's my prized entries. I want to have my entries thrown in anywhere inside of this. This is the watering hole. And I'm the cheetah. And I'm running down my dinner. I know that the market's going to offer time and price inside that little white area. So when price is in that area, I'm trying to capitalize by going long in it. And then I'm using this balanced price range here that was a former common gap. I'm seeing the signatures that this is exactly what it should do here. So anything on the downside, I wanted to add one more when it was trading down in here, but I had enough. I was like, okay, it's good enough. And then I set everything in motion. I added the annotations for the minor buy side liquidity pools, and then rally. Look at the delivery here. Look at that. Look at this candlestick over here. What's this candlestick's low? You're going to look at this value right here at the top of the chart. Look at this candle's low. 20,231.50. So 231 and a half. What's this candlestick's low here? 20,231 and a half. Folks, listen. Sam Seiden would fucking love it if he could have fucking had something that told you that. Elliott Wave wished the fuck he could fucking talk to you like this language. He wished he could have. He's still on the fucking beach. He's waiting for the right wave. I'm riding every fucking wave. Every fucking wave. Buying and selling, up, down, up, down. I can do it all day long. But it's based on things that are not in your bullshit books. It's something that's going on behind the scenes, okay? You never, ever, ever see anybody. Yeah, ICT's talking about a gap. There's always been gaps. He's acting like he invented a gap. No. I didn't invent that gap. I codified the concept of trading that gap even after it's been filled in to a precision level degree that nobody's ever touched on. So yeah, I'm the daddy. So We rally up, and what do we go back into? New day opening gap for today, October 1st. Where's the body start? Right at the low of the new day opening gap, and then it trades up, closes above it, and then we open here, and where's the low go? Down to the low of the new day opening gap. See it? Look at that. That's perfect, folks. And you're sitting here looking for harmonic fucking patterns. You're looking for indicators. Open, high, low, and close, and the time of the day. That's your indicators. That's all you need. You don't need anything. Now, I dress up my chart to show you these things because I have to be able to draw your attention to what frame of reference I'm using. I don't have all this stuff on my charts because, number one, it takes time to draw this bullshit out because I'm using a 15-second chart. Think about how many things you can do inside of 15 seconds. I'm reading the price action. I'm matching what I know algorithmically to what I've taught you as a language, and I'm waiting for the language talking point, which is the PD array, to appear in the chart so that way I can draw your attention to it. But I already know where the PD arrays are going to form. Like, I already know where they're going to be. That's the part that you don't understand. That's the part that I am going to allow you to understand, that is me being absolutely fucking arrogant because I know something that you're never going to learn. The closest thing I can take you to is what I've taught you in this language. My PD arrays are going to get you as close as I possibly can without divulging what I'm not willing to teach you. And for some of you, that is a big sticking point, and you want to say, I can't be mentored by you because you're not being honest. You're not being upfront with me. You're hiding things from me. I'm not hiding everything. I'm hiding what I have to hide, but I'm teaching you everything you need and more. Like, you don't need to know this entry model. Like, you don't need to know these things here. You don't need to know that. Just a simply optimal trend entry was sufficient enough. The silver bullet was sufficient enough. The model 2022 was sufficient enough. So, and now Caleb has a model. First presented fair value gap between 9:30 and 10 o'clock, then using it with a bias for one trade in the session in the morning. Like, I can do this every single day the rest of my life, and it'll be a unique model and never overlap. It'll never, ever overlap. There's never any overlapping. There's 3 constants to every one of my models, though. You ready? Time. Why should price move? Why did price move? Those are the 2 questions as it relates to time. It's going up for inefficiency or buy side, or it's going down for inefficiency or sell side. That's it. Those are the 3 primary core content principles of every single price action model that I have, or every execution, or every idea about getting into a trade. Those 3 primary pillars, they're always in every single one of them. But not every single one of those models are going to operate and execute on the same basis. Let me ask you this. What would it be like for you to say, wow, I like these common gaps here like this. And I like that because it makes sense. I can see it's not ambiguous at all. It's a real, actual gap. And if I'm bullish, I can wait for confirmation when the market trades above it. I'm going to try to just go in there and get an entry there, and then I'll use a stop loss based on the lowest low. And that would be my model. Entering in this area here, once we trade above it, this next candle, we trade into it. So you'd be filled there, and your stop loss would be below the low. Okay, it's only, what, 13 handles? That's not big. That's not a large stop. But what would prevent you from using that as your model? Nothing, except for you deciding that's what your model is. Is it a bad model? Absolutely fucking not. It's a wonderful model. It's a wonderful entry mechanism. Entry mechanism, stellar. But it's not sexy. It doesn't have a cool name around it. I don't have a video where I'm playing music around it and I'm showing a $20,000 win off of using it. But it had its place in what I did last night. It had its place in it. And my focal points is what I'm showing you here. You all want to see these books in your hands and you want to learn from them. I'm giving you more detail than I'm going to be able to put in those books. The books are just going to be this. But if you don't know the things I'm teaching on this YouTube channel, that book that you first acquire, it's not going to feel like it's taught you much. It's going to feel like something's missing. Yeah, the missing part is you haven't gone through my lectures here. It's gonna take you right back to this YouTube channel. So why are you rushing me to get those books? They're pissing me off about the covers. I want my cover the way I want it, and they're trying to argue with me about what they want to sell it for, what they want to make on it, and the cost. It's going to be my way, or I'm going to go to a different publisher. It's simple. So, and that's another reason why I keep saying publicly that don't buy my books, because I want them to see. I don't give a fuck about making money off of books. That's not why I'm doing it. And push comes to shove, I'll self-publish it. I don't give a fuck. But the point is this: when we're looking for trades, one of two things have to happen at the time of day that it should. So excluding time, because that's the first factor, obviously. Is price going to an inefficiency? Well, this one here was to see if it wants to go through it first. And it went through it. That means that I can wait now comfortably that we're going to get below these relative equal lows. Right here. How far below it? Upper quadrant of the dual volume imbalance on the daily chart that I taught you yesterday. Wait for the down close candle to form, laying over top of the upper quadrant. That is the qualifier. That's the thing that I trusted about it. How do you know that it wasn't going to keep going lower? It could have. It could have went lower and it could have stopped me out. No problem. Then I would have waited for something up here to get long one. I knew by them dropping it here like this, that was them just upsetting the smooth area over here, because retail sees that and trusts it as support. And that means they have orders underneath there. And the orders that were underneath there, I waited for them to get engaged. And then this candlestick right here, soon as we crossed this candlestick's open, that movement right there, I don't need it to close there either. As soon as it did that, that validates this as a bullish order block. Okay, I don't need it to trade above the candlestick to be an engulfing candle. That's what makes a order block. It's ICT bullshit. You guys don't know the fuck you're talking about. An order block is validated when you have other factors around the idea that the market should turn. I already anticipate the market turning. I'm already anticipating and predicting where my order block is going to form. I can predict where the fair value gaps are forming. I've done it in live streams. I've done it in executions. I've done this before in front of you. You're not going to find someone else out there telling you where my PD arrays are going to form. That's why you got to stop listening to these people. If you want to watch them because they're showing you how they use the information, I have no problem with that. I have no problem with that. But if they're out there trying to actively teach you my stuff and they're selling you mentorship, here I'm going to teach you smart money concepts or ICT concepts, they're fucking lying out their ass, okay? They're just winging it. They're doing the best they can, but they're not really teaching. They're demonstrating their current understanding, but they're not correct because they don't have everything that goes along with it. And when they're losing, it's because they don't know everything around it. And I'm not saying I'm 100%, but if I run Enigma, I'm not losing. That's what I'm trying to explain to you without saying it, but I'm going to place this tell you. If I run Enigma, not yin and yang bullshit, okay? When I run Enigma, it's fucking flawless. It's up, down all day long. All day long. I cannot use that. I cannot use that. There's no way that I can just go out there and just run rampant with that, because I will have visitors, okay? I'm not going to have that. I'm not going to have it. So what I do is I take you as close as I can, and I taught you a language that gives you some of the information that it allows me. Some of it. You only need one thing. One setup a week, and you don't need your job anymore. And most of you don't even realize that. I'm going to hopefully guide my son, Caleb, right out of his working class hero job. It may take till spring, but that's what we're watching, okay? We're watching this laboratory experiment. I tried it with Cameron. He wasn't able to do it because he's too immature. He's too video game minded. Caleb, admittedly, is a little bit harder to teach because his focus is easily distracted and he has attention deficit. And you see how it is what we talking. It's hard for most people to follow me because they're just not equipped to listen to this stuff. And I can go off on tangents for a little bit and come right back to it. And that's annoying. But that's just who I am, and I'm not gonna, and I can't change. So if it's a bothersome thing for you, eat it, okay? Because there's nothing else I can do but this. But once we have the entries in here, then I simply allow the profit phase to unfold. That means the portion where the price starts to run in your favor. And you just simply let it go. And it trades to the top of the dual volume imbalances on the daily chart, which is this area here. And then what does it create? A volume imbalance. This can act as a breakaway gap. Okay, so whenever you look for a level that's going to be a threshold for determining the strength, okay, or the magnitude of the price run that you're a part of, you don't want to see it do something like where it just trades to the top of that blue line there and then come back down. You don't want to see that. You want to see it leave and either create a buy side imbalance, sell side inefficiency, which is like the reverse of this big down close candle. You want to see something like that to the upside. And then when I see those types of things where it's breaking out of a higher time frame PD array, I like to see imbalances created there, and then I like to see them stay open. Don't take my word for it. Look at every single one of my examples. You'll see that's actually happening all the time. I'll write down optimal if it remains unfilled. I'd like to see this stay unfilled. Optimal if doesn't come back and trade to here. Something to that effect. I'm always drawing your attention to what you later find out is a breakaway gap. Okay, or if it's in the middle of the move, it could be a breakaway gap by definition, but it's half of the move, so that means it's a measuring gap. So that means that I have another price leg equal to whatever the first portion was. Okay, so what would that mean? What would that look like? We're going to say that if you're using this logic here with that volume imbalance being equivalent to a measuring gap, you could do something like this. You can go, this is the beginning of the move. Draw your fib up to, watch the, I gotta drop this for a second. Watch the 50% level here. Keep your eye right on here on this number here, okay? I'm putting that right at the bottom of the gap. I'm sorry, the volume imbalance, right there. You see what I did there? That's the volume imbalance. That's above the dual volume imbalance on the daily chart. 50% levels there, okay? So that means up here, this would be the first leg, and the second leg is this up to here. And then you could wait for a run to that level there. If this was a measuring gap, which it's not. It just means this is a breakaway gap, which means it's a whole lot more move coming. So I just taught you the distinction between a breakaway gap and then a measuring gap. But whenever you're leaving a higher time frame PD array, when you're bullish or bearish, I always invite the opportunity to see a buy side imbalance, sell side inefficiency when it's moving higher, or a sell side imbalance, buy side inefficiency when it's moving lower. And then I like to see those things stay open. Why? Because if you see the market rally like this up out of here, to cancel any idea that anyone can say that I'm trading off of support and resistance, classic SNR, they would expect it to come back down to that level and treat it as what? Resistance, broken, turn, support. The best moves are going to be seen where classics and support and resistance are being denied. They're not giving them a seat. Think about what I'm teaching you. I'm teaching you how to cannibalize less informed street money. Why would the market makers, why would the algo, why would the street money ever get a free ride with VIP seating? Why would they ever be given that when it's they themselves that are being cannibalized? Like the lion doesn't stand over top of its prey and say, hey, listen, do you want me to comb through your hair and get the ticks out before I eat you? It doesn't do that. Just like it doesn't look down and apologize before it eats. It just eats. So it's not going to set a table for its prey. It is dinner. So I look for these signatures where retail would expect, hey, okay, maybe if it goes down here, I can get in. Wrong. Elvis has left the building. Goodbye. See you later. Zoom, zoom, baby. So the first relative equal highs here, that's buy side. You can see at the actual high candles. Notice that. See how it does that? It's just beautiful, isn't it? It's almost like I know what I'm doing. The rally above the second buy side imbalance, I'm sorry, the buy side liquidity pool, was this one here, the minor. This was all on the recording last night. And then just placing it right at that level here or just before it You can see there's the exit. There's a little caret popping out right down here. See that? And then ultimately, we have the 287 level, that buy side, and you can see that being hammered right there. See that? No market replay. Okay. So when you see trades like that, I could have used the trailing behind the candlesticks when we rallied above here by having the stop loss on the balance of 8 contracts. I could have trailed it here and let it rally up. And every time it created a short, let me take the execution off real quick and I'll explain this. And then we'll get into the drills today. As the market traded above here, placing the stop loss of 8 contracts there, and as it made a higher high here, right on this is called running down equity. Okay, every single time it creates a higher high. That was not what I wanted to do. There you go. Every time it made a higher high, like it did here, I could take one of the 8 contracts off, wait for a swing high to form, and then when it trades above this swing high, take another contract off. And this high here, if it takes out that, take another contract off. And this high here, when it breaks above that, take another contract off here. The whole time trailing up the remaining balance. So that way you're strangling and choking like a noose around the neck of this trade. You're getting every ounce of blood from it, squeezing it. And then finally, it would eventually stop you out on whatever remaining portion you had, because there's not enough swing highs here to get 8 contracts off by doing singles. And then ultimately, it just rolls down. You would have stopped out. But I was tired. I want to get to bed last night. And then when I laid in bed, I kept going on Twitter and kept going on my private mentorship groups. So, but ultimately, you can see it end up becoming a market maker sell model, which is shown here. See that? Original consolidation, smart money reversal, low risk sell inside this inefficiency here. First stage distribution, second stage redistribution. And where does it trade down to? Where's it trade to? Another level that's on my notepad, but you can see now visually, it's the high of yesterday, Monday, September 30th, 2024's first presented fair value gap high. Holy shit, you're telling me that these inefficiencies work past the day they were formed? Yeah, there's this guy, calls himself ICT. I don't fucking understand why he calls himself that, but he said that these gaps can last for several days. Can you imagine that? Can you imagine the shock and awe, the disruption in the industry if people started paying attention to that? Oh, shit, that guy ICT. Anyway, we're going to take these lines off here because we don't need them. That's a distraction, and this is a distraction, and this is a distraction. This is a distraction, and we don't need the sell side line anymore. Oh, wait a minute, what was that? Yeah, I need that. Take this off, and then, no, wait a minute, I don't need that. These are the quadrant levels. I don't need that at all. All right, so that's the business. Okay, so hopefully that explained the trade. That also explained Indigo entry is simply just a purge of liquidity. It's bullish or bearish. And the order block that trades into the liquidity, it has a volume imbalance on the top of it or below it, respective to it being bullish or bearish. Okay, and that's all it is. So now we're going to go to the part where I have to remind you that this is not a signal service. It is not for you to copy with a real account. You are going to lose today. If you do everything I'm going to do in front of you, everything I'm telling you that I'm going to execute on, okay? I am not promising you a positive outcome. I'm not trying to trick you into a losing trade. I'm not trying to get into a winning trade and say, oh, I lost because I meant to do that. I'm literally teaching how my son is to overcome his fear about executing with a limit order. Because right now he's plunking down just market orders. Right now he's working with a Top Step account. He's got, I think he said $1,200. I don't know how they work, to be honest with you. But he said he's like $1,200 or so, and then he gets what they call funded. So I guess I don't know what that really means. I just know that Cameron's done it before. He got a payout, and Caleb has the lowest account, whatever account size that was. That's what he has. He only has one of them, and he's trying to get funded by tomorrow. That is his goal. I told him, I said, what happens if you do it by Friday, or what if you do it by next week? What's the hold up? Like, what's the big deal? He's just trying to do it. So we'll see. Okay, but he's had consecutive winning days, and there it is. So once he gets it accomplished, I'll have him send me the proof of it, and then I'll tweet it, and that way you can see it. And then he'll have, I guess, a funded account, and then his goal is he's to make his weekly salary for 4 weeks. But when he makes it, he has to stop trading. Now imagine that, right? Like, he's going to be in a position where he could potentially take money out of whatever this account is. And he knows that he can do more. And he knows that I'm watching him and I'm holding him to the fire that he has to do this. So the first rule of Fight Club is you have to don't talk about Fight Club. Obviously, that's the first rule. Okay. So in trading, you don't go to work and tell everybody that you're going to quit your job. You don't tell Carl what you're going to do. You don't tell Carl that you're trading. You don't tell Carl you just got a funded account. You don't tell Carl you just put money in a real account. You keep everybody in the blind. Don't talk about it, okay? And I'm teaching him to trust that with one contract, not 5, not 20, not 15, not 30, whatever it is they offer, one. Never, ever, 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 ever more than one contract. I don't give a fuck what size contract you got funded with. Trade with one contract. One. Because if you can't quit your job with that one contract, doing more than one contract is the only thing it's going to do is going to guarantee that you're going to blow it. You're going to have more fear about the outcome of that trade because you're trading with leverage that you really can't afford to be using. So one contract retires you. One contract removes you from your job. Your long commutes, Caleb, one contract does that. So when you feel the impulse to go into 2 contracts or 3 contracts, or if you do finally get a losing trade, don't think you got to correct it by doing 2 contracts. Just go home with the loss. It's not a problem. It's not a big deal. It's easy to fix that. But you don't want to start all over again and go through the process of what you've already accomplished already. Okay? You're doing it right. Just be patient. So I'm going to type this out, okay, and it's going to be a reminder to you all, okay? This is called Volatility Pinball, meaning that what I'm going to be doing is I'm going to be buying and selling with a limit order and using limit orders to exit. And we're going to teach Caleb, and you're all going to learn how to do it as well, how to practice with a demo account and desensitize yourself to price action. Also, reading order flow, running against liquidity, trading inefficiencies. Okay. You want to learn how to pick the right fair value gap. You want to learn how to pick the right order block. You want to learn the right draw on liquidity. This is how you do it. My books are not going to help you. My videos aren't going to help you. Paying somebody else to talk about my stuff, parroting it, and sometimes many times saying it wrong, they're not going to help you. Watching streamlined 5-minute trainers of my content is not going to help you. All of that stuff is useless until you get into the chart and do what I'm about to show you today. You got to press the button. You have to have something engaging your attention so that way you can see it. You have to feel it. Now, I want you to think about something. I got 1.4 million followers on YouTube. I have actually more than that because the majority of the comment section are left by people that don't follow the channel. So there's a lot more people following me and watching my stuff than you see. They download the videos. That's why the views aren't as high as they are. They don't watch them. They download them because they're afraid that I'm going to delete the channels or somebody's going to come in and say, let's get this guy's shit off the internet. It's making people really, rich. So, I mean, you're welcome to download them. I don't care. I mean, I'm putting out there for public consumption anyway. But the idea is this, okay? when we're looking at price action, I'm going to magnify this, and we're going to trade inside of every current dealing range. Now, this is going to chop up your account if you try to do this with real money, or if you're trying to trade this with me with a funded account. You're going to get beat the fuck up, okay? It's not about the making money, and it's not about losing a little bit. It's about entering. It's about using specific price points to enter and practicing, and then seeing what it feels like when you get into them. And over time, what will happen is you're going to see a graduated improvement in what you're seeing in the chart and what you're keying up on as an entry, okay? You'll see what I mean when we go through. The first couple of them, I'm just going to wing it. I'm just going to toss it in there and say, okay, I want to see it go to this liquidity or this high or low, okay, or this inefficiency above or below. But let me get this chart set up and type out my disclaimer first, because otherwise yahoos are going to take this and have a field day with it. But hopefully, I'm not sure how many people are actually watching right now live, but hopefully you guys can appreciate what I'm doing here, and what I'm explaining is not for you to think as this is me taking trades to make money. That's not what this is. Oh, real quick. Let me show you this. This is what I do every single session, okay? For disclosure and for compliance reasons, I am not a financial advisor, okay? In the United States, I do not hold a certified trade advisor license. I'm not legally in a position to tell you how to invest your money. That's why we're talking over top of a paper trading account. You see that? Now watch what happens. When I click on this, okay, you can see that the balance is $112,200, okay? That's the profit from last night's Asian session trade. You see the date on that right there? What I do is I'll log that. I'll put the date in. I'll give any kind of reference point that's going to be a major driver for the day. And because I know that if I click on this little area over here and I click on chat, you're going to see TradingView talking to me. TradingView's asked me to have a partnership, an affiliate program with them, okay? I have respectfully declined. I have these already recorded and screenshot in case they delete it, so that way it never, looks like I'm telling you something that's not true, or I don't want any kind of bullshit coming from it. I want to be able to use this platform because my community has asked me to use this platform. When I left MT4, I asked everybody that was my community, I said, what platform would you like me to use? And they all, predominantly said this one. So I didn't choose this platform. My community chose it for me. Now think about this, okay? I know some of you can't get this. Some of you just cannot fucking fathom why anybody would do this, okay? But think about it logically. If you see me taking trades, okay, here's the historical tab, and it's only going to show you the trades that I did last night. These are the executions. Everything is here. Everything here is directly related to what was shown in. I hear my puppy snoring like a. That's these trades right here, okay? Everything here and what I recorded and shared on Twitter last night, that's this. Now, what happens if you work for TradingView? What happens if you have the access to see my account, okay? I don't give a flying fuck if you feel this way, but this is how I view it, okay? And because I have a measure of obsessive compulsive disorder, I don't want this in the back of my mind because it's always in the back of my mind. So this is exactly what I do. I'm going to show you exactly what I do. I've shown this to my private mentorship group. This is exactly what I do every fucking day in TradingView. I do this every single day. Do you see any red here? Do you see that? No. every session, every new session start, okay? Sometimes I'll see a Yahoo say, oh yeah, show us the trade history, you reset. When I see that, I immediately say, okay, I'm going to keep the account active and I'll do another trade so that way they can see the previous session trade was still in it, and I'll delete the executions. I'll go to show the S&P contract and then come back to the NQ, because if you do that and you reset your account, you won't be able to pull the old executions up. They won't be able to be retrieved. So because, and I'm going to say this for the last fucking time, and if anybody has a problem with this, you can direct them to this minute marker of this video, because I don't give a fuck anymore. I'm tired of it. I understand that a lot of people out there cannot accept the fact that I know what I'm doing, and you love to say I can't trade, and I love watching you type that shit out because it literally gives me a fucking raging hard on, because you believe your bullshit, and I love it. But I want you to understand, if there is a way that TradingView can pull up all of my annotations, if I can pull up, listen, if I can sign out of TradingView right now, and I saved, if I use the layout right now I have naked, it was just simply me using a brand new fresh chart, and I marked it all up based on yesterday's analysis with POW and all that. So I did everything in front of you live with all the markups. If I sign out of TradingView and I come back to it at a later time, a week later, these annotations that I left there are going to be waiting for me. Do you think that it's reasonable to assume that anyone in the right position of TradingView, that they can go into my charts and see what annotations I have noted? It's pretty reasonable to anticipate that that is likely, very likely, right? Because if I can pull up the information, why certainly shouldn't they be able to do it? Now, take it one step further. What happens when I have an account that they have clearly seen me fucking run these things up? I've proven it with my private mentorship. I've ran up an account. I've showed the entire full history. I've done huge fucking runs, huge runs, millions of dollars in these things, okay? I don't like the fact that they could very easily do what many of you do with your funded accounts. Put a trade copier on it. So I am of the belief, and I mean this in all sincerity, but still to the point where I know it's going to be nauseating to sound narcissistic and egotistical, but there is nobody on this fucking planet is going to be able to trade like me. They're not going to be able to trade like me. Not as consistent, not as perfect as I can be, as I want to be. I can turn it on and turn it off. But here, I'm at a disadvantage because I'm inside of their realm. I'm inside their little circle, okay? And they can see everything that I'm doing at the moment. So what I do is, to keep these motherfuckers from doing that, every session when I'm done showing an example, watch what happens. Ready? I go over to this little box, or this little gear thing here, okay? I click on it, and then I do this. Watch this, right? It costs me no money at all. It's free. Watch that. Ready? Look, watch what happens. Ready? It's gone. It's gone. I've proven this with my private mentorship students, because I've had students there too say, yeah, how do we know? How do we know? I'm telling you, I reset every session. After I make a winning trade, I delete the fucking account and start all over again. I don't give anybody at TradingView the opportunity ever to copy me. And then what I'll do is, because I've created a new account, I always do this. Watch, pay close attention. Now, because it's reset, I go over here and then I'll go to the chart. And then I'll add this. And I'll say, okay, right now I want to go long. Don't follow me, by the way. Please don't do this. I'm just telling you what it is I do to keep these people from ever wanting or trusting that they can copy me. I want to go long right now. So I'll buy that. And let me show you the orders and stuff. Now, you might think this is a little paranoid. I'm sorry if you think that way, but I know if I had access to following somebody like myself, I would fucking do it. If I could put a copier account on somebody like me, and I'm actively in here running mentorships and proving that I could trade, and I'm going to go out with the intended purpose that I'm going to try to do well, if I could put a copying account on that, I'm absolutely fucking going to do it. And I would risk getting fired doing it. I don't give a fuck. I don't give a fuck. Because whatever this guy ICT is doing in his account, whether it's demo or not, and he's making $20,000, $30,000, $40,000, $100,000 account moves, come on, man. If I'm leveraged up on that with a funded account, I'm done. I'm the world leader, right? I'm done, and it's done inside of a month. So in my head, that's what's going on. So I have to go through this process of saying, okay, I need to throw them off. And I do this, it helps me. It helps me discard all these things that are very distracting to me because my mind is going 100,000 miles an hour all the time. And while I'm talking to you, there's several different topics that are trying to fight to get to the front of the line. So I can't have anything distracting me or it's going to mess me up. I won't be able to focus. Like I can't focus. If I know that I'm running the same account through TradingView in a demo account, I know that there's a potential for them to copy me for the purpose of just copying me with a funded account. They don't have to necessarily be risking any real money. They're just risking, I guess, the reset fees. But be honest for a second, okay? Just for a sec. Even if you don't fucking like me, if you don't believe me, if you don't trust me, you think I'm a fucking guy that lives in a gutter somewhere, some fucking slum, whatever you want to think about me, put yourself in my position, okay? Say you could actually trade. Just suspend your disbelief about whether you think I can trade or not. What happens if it was you and you know you knew how to trade and you could trade really, really good? Would you feel comfortable knowing that anyone at this company could do it and I would never know? I would never know. You would never know. But because my mind thinks this way, it's a fucking problem for me. It's a very big problem for me, which is the reason why I tell all of you when you follow my live stream and I'm giving you commentary and it pans out and you've taken live trades with that, with money, please don't tell me you did that because it fucks me all up. I don't want to know about that because every single time I do something in a live stream, I'm going to be worried about you. Did you over leverage? Are you going to follow what I'm doing? And what happens if I'm wrong? What happens if I get a case of the ass and I'm like, you know what? I'm going to show this person, don't do that. You don't know what it's going to happen. You don't know how I can turn and flip. Okay. I can swing from one spectrum to the next. So to keep me balanced, I do something like this. I'll go in here. No reason to get into that trade. Tell me what in my repertoire tells me to be long there. Nothing. But what I'll do is I'll put that on and then I'll go right down here and I'll reset again. And then I'm set for the session. And then I'll go in and I'll look for my execution for my private mentorship, or if I'm sharing something, or if I'm practicing. So that's the truth. That's what I do. That's why you don't get to see the history tab. But, okay, for a week, the final week of our trading before we go into the holiday break, which is the last week of this, what is that actually? So the Halloween, no, was it the 1st of November? I'll give you the 1st of November. That's our last live stream, okay? The week of October 28th, 29th, 30th, 31st, and November 1st, I will show you every single thing that happens on the historical tab on one account, okay? So, well, that's not 30 days. That's not 3 months. That's not 6 months. I don't owe you that shit, folks. Some of you honestly believe that you're entitled to something. You're not entitled to me talking to you at all right now, let alone fucking giving you anything else. Like, you need to dial back that shit. Like, you think that you're so significant that other people, let alone me, are obligated to bend to your expectations and your will. Like, fuck you and your will. Fuck you and your expectations. I'm here because I want to teach my kids. That's the whole reason why these videos have ever been produced. It's for them. You're just fortunate enough to be listening to it. So now let's go in, type out the disclaimer. Okay, so hopefully this is going to be, we're going to actually do this on a one chart run. That way nothing can be taken out of context with another chart. And that's not what I want to do. So let's magnify that one. All right, so that way everything is here and everybody understands now. Audibly one more time, because I want to be able to know that I've said this ad nauseum. Please, please, for your own sake, do not copy me with a live account. Please do not copy me with a funded account combine. Please do not copy me with your funded account. I promise you, if you do this, you're gonna incur losing transactions or trades, and that's going to mean that you're going to lose money. Please don't do that. The purpose is to teach my son how to place a limit order, how to put the stop loss in, and how to put a take profit in. So everything is removing the necessity for market orders. Okay, so I'm going to change this to 1. All right, and everything that I execute on, I'm going to keep this up here so that we can see it's not market replay, and you can see that the little button up here is showing that it's the market is open. You all are here live, okay? So however many that are here, you're seeing what I'm seeing as it happens. Actually, let's do this. Let's take a water closet break. For some of you that don't know what that means, it's a bathroom break. That way I can continue until 10:30 unhindered. So what I'm going to do is I'm going to type out that we're taking a 5-minute break. And we will be muted for that duration. I'm going to go relieve myself and come right back, and then we'll be at it. All right. Appreciate you giving me an opportunity to do that. I'm sure you probably took advantage of it as well. Now, can you imagine the folks that would have copied the long up here? They're getting punished for that. Am I cruel for doing it? I'll leave that up to you. Now, how we do this? Let's go to a little bit more data back here. And this is a 15-second chart. All right. And we have new day opening gap down here that could draw to. And real quick, I'm going to be with you until I do 10 of these. So while I said we'd be here till 10:30, if it requires me to be here a little bit longer to get 10 executions, that's how long it will be, okay? Just know that if we are thinking, Caleb, that if we're bearish, if this is the market price, that the market you're trading, which is NASDAQ, like right now, that's the market price at 241.5. If this is market price and you think that it's going to go to this level down here, what level would that be? That'd be like an old low, relative equal lows, an inefficiency below price, or in this case, the new day opening gap. That could be a draw, okay? But right now we're seeing it trade into an inefficiency, which is this blue shaded area. If this is where you think price is going to go, that's your draw on liquidity. You have to know where you think you're going to be wrong. In the beginning, son, you're going to do this wrong a lot, and it's normal. Okay, you don't have to worry about it. Don't make it a big thing. If you increase it to a degree of importance in the beginning, you're going to think about it like that the rest of your career. This is your stop loss. You must always have one of these. You never, ever, ever assume a position and not have this. Ever. This is your insurance policy, okay? This tells the market that you are admitting that you're wrong, and this is a good time to be wrong, because if it goes to this point, you're basically saying that if price goes from market price and you get in the area near this, but it trades up to this price point, you're saying to yourself and to the market with your execution that I am wrong about my idea and I want to be out at that price, because if it goes to this price, your belief is it could go higher and incur larger risk or loss. And this is to mitigate that unrealized exorbitant loss or blown account. So this is not a bad thing. It's not to be viewed as something terrible. It's not a cancer cell, okay? It's not something that you want to stay away from. It's something you want to embrace. This is your shield, okay? Where market price is, that is where we're at right now, mark to market. That means wherever the most recent tick in price is showing, every time this little green box moves and fluctuates, that's market price. 251.25, 251.5, 250 even, 249.5, 250 even, 250.5. Okay, that's market price. That's this. If you believe that this is your draw, okay, this is essentially your target. This is what you're aiming for. Since this drill is not equipped to do things like partials, it's one and done. It's a full stop, full target. That's it. One of the two are going to happen. Whichever one trips first ends that exercise, and you got to wait to do another one. Okay. So if you're expecting price to draw down here, that means you're bearish. You have to be able to determine where you're going to frame your stop loss at. That entry point is the secondary concern. And let's say that this is your entry. Your entry price. And this will be based on if we're bearish, some kind of a premium array. Okay. So how would you frame a setup like that? Well, when we're bearish, we want to sell short when price is going up. So we're going to sell on a limit. So if market price is right here, well, let's just do it real quick with this one. See this little gap? See that little gap right there? We can go in, right click on the platform, go to trade, sell limit, one contract, right there, just above. Let's move it down here. Right. There's the actual high. One tick below it is there. The stop loss gets dragged to the high. And then the target would be taken down to the high plus one tick right there. Okay. So now what I've done is I've used the logic over here that I was outlining. The market would have to come up, trade to this candlestick's high, and that would book the limit order entry on a short. The stop loss would be here, the take profits down here. I don't personally care. I don't care if I'm right or wrong. That's the execution, that's the entry. And the logic is over here. You're seeing it do this. Like here's the market price. You think it's going to go down here. You place a limit order, a sell limit order. The market has to go up to it. So you're selling short as the market is going up, away from where you think it's going to go. Limit orders have to be entered above the market price when you're selling short. When you're buying on a limit, okay, when you're trying to do the opposite, say you're bullish, everything here would reverse. It would be something like this. And say you believe that the market's going to go up to some old high, some kind of fair value gap, something to that effect, and you have to be able to frame it around the basis of here's the market price, and at the time, if you're bullish, you can frame a trade on entering on a limit. So you're going to buy on a limit. That means the market price has to drop down to your price and lower. So whatever your limit order price is, if you're trying to buy it, it has to go at least a minimum of one tick below that price. That's the filling mechanism. Okay, so it has to fulfill that at least to accomplish that order being executed. If it just trades to your price and not go any lower than that, it won't fill you. Sometimes, because of your contract size, if there is a say you're trying to do an 8 or 10 contract trade. Okay, so now you guys watch and see a losing trade. Okay, what you're going to do is log this. I'll come back to that in a second. You're going to log that. From your entry, how much did it give you in terms of unrealized profit, if at all? How much time did it take to get to target? It didn't get to target. How long did it take in terms of time to get to your stop out? How much time did it take for that to happen? And then what happens is you get data based on that. How much time do your trade executions last? So you don't have a baseline on how long your trades usually last. Now, there are tools out there. There are things that give you that KPI, that measuring instrument of how long your average trade is. What is your average profit? What is your average risk per trade? All those things can be calculated by yourself manually, and you want to have that data yourself. You don't want to just rely on some kind of external thing. You want to get comfortable with seeing it and knowing what it is for yourself as a trader. All right, so that's one. So we have one transaction done, and you're not trying to make money, Caleb. You're trying to practice using the mechanism of a limit order, framing the setups, okay? Let me finish this back here, and then we'll go just right into price action because we're right. Let's watch the opening price. I don't have the disclaimers on here. I should have had that on there. Sorry. I'm watching that little inefficiency there. But if you're bullish, you're going to see market price. You have to wait for price to drop down away from your market price. So it has to go to a discount. It has to be a down tick. That's what high frequency trading algorithms use for their entry models. It has to drop down first, here to here, and go below that by one tick. Okay, and then the buy limit order, if you're bullish, that would trip, and then you would look for it to draw to your target or get stopped out. So if you're buying, you're going to be buying below market price on a limit. If you're selling short, you're selling above the market price on a limit. All right. So let's pull up the regular trading hours. Small little gap in here. It's already filled that. There we are. Now, when you're doing these drills, this is when you can put on some music that you like listening to and just relax. Don't try to put too much emphasis on. Let's see, there's a volume imbalance right there, and now we have this. Gap. Down to gap. Okay, so this is drill number 2. And you log every individual point of reference for your measurement. How long it takes for the trade when you enter it. Like how long at the time you entered the trade order, not when you entered. Okay, so there you go. There's one. So now we have 50-50. We have a losing trade and we have a winning trade. It's not about the money. It's about the experience of placing the orders, Caleb. And you're going to sit and wait and relax. Trade down to new week opening gap. Now, you're probably wondering, okay, what do you do? What do you do to instigate the trades, ICT? Like, what are we doing here? Like, what is the reason for you to get into a trade? Whatever you're practicing. Because Caleb's learning the fair value gap, his practice session is going to be just simply looking for fair value gaps. After the market has created some measure of jaggedness, like it's made its jaggedness up here, traded down, you watch me pick this one here. Obviously, you know what that one is. I mean, it's the first fair value gap of the morning. It's at 9:31. So it fits the criteria, and you saw how fast it delivered. So I just want the haters to take notice of that. But anytime that you're trying to trade with an order block, if you're practicing with that, you can trade with order blocks. You can trade with institutional order flow entry drills. Whatever mechanism or PDA rate you're using to practice with, that's what you're doing. Okay. All right. So I see this gap in here, but I want to try to alternate buying and selling back and forth. Like I want to do that for the purposes of kind of like skewing the experience factor here. So I want to kind of like mix it up a little bit. I was looking for a coin, but nobody has any cash anymore around here. But I was going to flip a coin, and I was going to take my first drill as a long if it landed on heads or tails. I would go short. That would be my first exercise. But I just said, screw it, I'll just go in here and just wing it. Okay, got 8 more of these things to do. Jam into Kicks, by the way. Bows are rocking right now. Kicks is a local band, old rock band. All right, now let's say that you were going to try to be a counter trend trader, okay? And we're in a 15-second chart. Let's try to do a drill, which is obviously going against order flow. But you want to get this experience. You want to feel what it feels like to enter the order using the logic of buying when the market drops, as we've already shown 2 times here, selling short with a limit order. I want to try to find one on a buying opportunity, even though it's against the underlying order flow. And if we can frame a small little fair value gap here on the 15-second chart and try to trade back up into this inefficiency right here and try to draw back directionally to the new week opening gap. It need not trade back there all the way, but if it can give me an opportunity to this thing's lagging. Well, I would technically be, in long right now. The stop, where it is. Let's see, it's fucking around. Trading View, look, man, you're losing here in front of everybody. I'm trying to show this stuff with your stuff, and you asked me to do an affiliate program, and I'm not able to use it in front of the world. Okay, so we'll get back up into there. You see me adjusting it, but it won't update. So awful, awful, awful. Good grief. Again, Trading View, this is a bad look for you today. That should be stopped at, yeah. So that would be framed on as it was looking like a fair value gap, trying to trade up to there. So now we have 3 transactions. Immediate response, stopped out. It's not giving you any indication that it wants to go higher. Wonderful. Pay attention to this, Trading View. I know you watch my videos, but you got to get your shit together because this is not a good look. All right, so now scrunching this up, we have that. Remember that yesterday I was showing you the 60-minute discount wick consequent encroachment? We're trading inside of. I want to be filled in that gap right there. And stop us right there. Take profit. We'll try to aim for just above that consequent encroachment wick. Okay, this is execution 4. Again, all we're doing is practicing. What I just did there, I was looking in between these 2 candlesticks here, and I wanted to be inside that as an entry. Part of the drills, when you have more experience using it and practicing with it and playing around with it and having fun, that's what this is supposed to be. It should not be, I'm afraid it's going to be a bad result. I'm afraid that it's going to be all losing trades. I'm afraid it's going to be a net loss on the day. You don't think about that. You're in here practicing, trying to get a feel for using, number one, the platform, because it's risk-free for you to be able to do this. It's not something that's scary. It's only scary because you're saying it should be scary. You're saying that it demands the results of profitability or being right. It's not about being right. This is something for you to play with. And you're using the demo account properly. You're executing with it. You're not trying to prove profitability. You're not trying to avoid losing trades. You're just getting the practice of including the use of the PD arrays and looking for liquidity and following order flow. Go against order flow sometimes. Get a feel for what it feels like to do that. Because if you try to avoid every instance of where things might hurt you, you're never getting the proper experience. Like you don't know what it's like to make money and big money yet. And that's a scary feeling. You think it's going to feel good. It's not. It's going to be terrifying because you're going to freeze up. You're not going to know what to do. So if you relax, let's say it that way, if you just simply relax and allow your practice sessions, these drills, it's just like you taking a walk. It's good for your health. Put some music on, listen to an audiobook. You're exercising. You're moving your trading muscles. You're trading with the tools. You're using the logic. And now watch. This is something where if it took out this low, say it takes out that low, if you want to go one step further in your drill, in your annotations, you would say, okay, hypothetically, if this were a trade that I was using in my funded account, I would take a partial right there if I had more than one contract. And that means this would no longer be open to a loss because you've pocketed something. And then you can roll the stop after that partial. And when you're practicing, even though you have one contract on, the logic is you annotate that one partial was taken below the low here. So you would have a partial below here from your entry. That's pretty good. Like it's better than most live streamers out there in terms of what they're capturing. I'm not trying to shit on any of them, but I'm just saying, like, let's be practical here. Some of these guys out there are not looking for home runs, and they don't need home runs. I mean, look at Trades by Matt. He was doing 10-point runs and made over $300,000. Took it all out. Truth be told, I told him in private, I said, take all the money out and then start all over again. That way you've banked $500,000 plus. Like it's yours. Like they can't take it from you. If you're going to be consistent by starting all over again because you have a huge windfall right now at your reach. You just take it. And he made his decision. So the idea that you would like build in a pyramid, you can practice that too. I don't necessarily see anything yet that I would have pyramided on except for that one right in here. That's a nice little one. That right there, that's a nice point. But if you recall, remember these levels over here yesterday? Like down here is like these relative equal lows. I think if I'm not mistaken, it was on I don't know what time frame it was, to be honest with you. Oh yeah, there's the benefit of having annotations correctly, right? The 15-minute relative equal lows based on September 23rd's weekly low, but we also have 15-minute relative equal lows on sell side. So even if this were to stop out, we can look for another opportunity to engage with it to see if we can get a rundown into the discount wick constant encouragement of the hourly chart and maybe try to gravitate towards that again, September 23rd's weekly low and 15-minute relative equal lows. All you're doing is getting experience. That's all this is about. It's not about being better than somebody else. It's not about being profitable. It's not about passing combines. It's you just practicing, getting used to taking the orders and entering them, and then submitting yourself to whatever the market's going to do afterwards. Because right now, I don't have control over what the market's going to do. Like I have to submit to it. Like whatever it's going to do is going to do. And then I'm doing it right in front of all of you. I'm pushing the button, okay? I have no fucking fear of doing this. Zero fear. Even less now because this is a drill. But you're going to see me pick the right moves. You're going to see me trade them with precision. They're going to go to my targets. And you're going to be left with, hey, what do we do now? Right, what do you do with that? It's not going to make you a better trader because you saw me do it. It's not going to make me any less of a trader or any more of a trader. It doesn't make me more right when I do it. I already know I can do it. You want to be entertained by it. You think that you have some influence or power over me because you say, you won't do it. You won't trade live. You won't trade live. Motherfuckers, I will trade circles around all of you. Okay? But that's not the point of this. When we get to the point where we have to start pushing the buttons, I told you we'd be here. We're here now. I want my son to know how to use limit orders. I want him to see what it feels like to be in the orders, how he measures his own personal engagement. Like he has to recognize that stuff. And if you don't recognize it, you you won't get accustomed to normal. This is normal for me to feel like this. And over time, that trepidation, that anxiety that you initially feel, it goes away because you've been there so many times and the thing that you were fearful of never happened. It never happened. So what's actually happening is you're being desensitized to the what if thinking while you're in a trade. Well, you're supposed to be focusing on what's it telling me while I'm watching price action? Is it telling me that it wants to continue moving higher or moving lower? Everything that you're reading in terms of watching individual candlesticks, this is tape reading. It bumped the high here, filled in this entire gap right here, right there. Okay, then traded lower. Right now we're sitting at these lows. We would not want to see it trade above here. We want to see it break heavy down here. But what happens if it does take out that high? What happens if it stops out this position? No problem. If it shows a displacement lower again, I'll use another 15-second fair value gap to try to get a short on and aim for that 60-minute again. Now, I know which ones I want to trade on. Caleb doesn't know yet. You don't know yet. But doing these drills every single day, there should not be a day that goes by unless you're on vacation. And you would annotate that as a partial. So, okay, underneath this low, you would type out in your chart and screenshot it and say, I would have a partial here. And then you would have whatever that partial, we'll just say that closing price is your partial. So you'd get out at 20,066 from an entry at 116.75. So again, you're beating the fuck out of the YouTubers, and all we're doing is a drill. That's how you remind yourself. You give yourself encouragement. You cheerlead yourself. This is better than so-and-so. I've been impressed by so-and-so's trading. And now see how it's running here? Then you can do another partial. Why? Because it's starting to expand. It doesn't need to go down here yet. It could wait and do it later on. So you would do a partial in here. So you'd have a partial at, we'll say, 2041 and a half. So 20,041 and a half. But you only use one contract because you're trying to avoid feeding fear and avoid feeding greed. Isn't this fun? It's fun, isn't it? You like it because I'm pushing the buttons. But it should be fun for you because you're watching with a purpose. You're not just pushing a button with no understanding of what it is you're watching or studying. That's a waste of a demo. That's a waste of a demo by doing that. Now imagine if you did not say partial, where you did not annotate that you have taken partials off. While you're doing the drills, by annotating that, you're training yourself to do what? Look for opportunities to take partials. Look for opportunities to take partials. Look for opportunities to take something out of the trade. Take something out, fund the trade, remove some of the risk. Give yourself that cookie, that little reward, that little attaboy, that a girl pat on the back. In the beginning, you need a lot of that stuff because it's hard to wrestle. It's hard to get into a trade and submit yourself to an idea when you don't have any experience. That's why you want to watch me live stream. That's why you want to watch me push the button. That's why you enjoy watching my trades. You like watching that because you're living vicariously through my executions. But it's entirely something different when you're doing it over live data, when you have to submit yourself to it and you have to wait however long it takes. And every time we had an opportunity where I said when it gets below these lows, that's a partial. You want to record how much time it took from the point of your entry, what minute mark it was up here, and up here, where those entries were, and that's a partial right there. You take off one there, and then you want to see speed drive right into that 60-minute consequent encroachment. That's what would be ideal here. But because you're taking partials, as price goes below the previous lows, every time it makes a low and retraces back, when it does that, you absolutely, if it trades off as a opportunity to go back below it one more time, even if it's one tick, you have to take a partial. You have to do that because you're not going to have the experience to, number one, sit through the trade in its entirety. You're going to be fearful. You're going to want to get out of it. It's going to cause you heart palpitations. And remember, you're only trading with one contract. But that one contract is going to feel like you're risking your entire mortgage, right? You're risking everything that makes who you are as a person financially. So when you see this stuff and you see it panning out and you're practicing in a drill like this and it goes to where I'm teaching you, how are you going to listen to these people that tell you you'll never see ICT trade live? You'll never see him outline a trade. You'll never see him push the button. You'll never see him give you the logic behind a trade. You'll never see that. But here I am doing it again. And they're still going to come out and tell you that I don't ever do it. Oh, you got lucky. Oh, this, that, and the other thing. It's okay. It's okay. Other people's opinion about you aren't going to change the facts about you as the trader. The same thing here. Now, because we went into that consequent encroachment of that discount wick, I would want to see it try to make an attempt to go below that and draw down into the relative equal lows. So let me see if I can get one more fair value gap in here before we can get down here. It could just very well, reverse here or drive aggressively lower. At this point, if we were trading today, like if this was a trading day, I would be done for the morning session. If I was closing it out here, I would be done. And I would just look for this move as a moral victory and be like, yay. Truth be told, though, I wouldn't be out just here. But let's just say that was the position. And I either say I got stopped out and I've made as much as it's shown here, I would more or less say, okay, I'm just going to watch the rest of it deliver. And I've done this in front of my students too. I lost track on how many transactions we had so far. 1, 2, 3, 4. So we had 4 trades. Look at that. There's red. You don't ever see that. Look at that. Look at the difference between the green and the red. That's probably random. So watch that consequent encroachment of that wick. Okay, we went down below it. I like to see when price gets down below it and comes back up and uses it as a premium array. I like to see that. But that's not what we're studying here, so I can't execute on that. It's got to be a fair value gap. Every single day, you're going to be practicing, looking for liquidity, where the market will likely to draw to, where it will hopefully not go to, that we can frame a stop loss. And then you get into the exercise and you relax. You condition yourself by holding on to the position. I can't hear myself. I don't hear any of my audio coming through. Can you guys hear me? I'm asking on Twitter if you can hear me. Just give me a 5x5, please. Man, I hope that was picked up the whole time I was talking. Good grief. Can you hear me? Somebody, please. Thank you, Richard. Appreciate it. I'm not sure why I can't hear anything on my end. All right. As long as you can hear me, I'm not changing any settings over here. All right, so here we have another low. And when I have my notes, it may not give me a fair value gap. It may just plow into them relative equal lows now. All right, we'll go there and we'll look for a drive into that. So this is exercise number 6. We don't need to be right. It doesn't need to pan out. If it stops out, it's not a big deal. It's just you submitting to the idea that this is unfinished business down here. Okay, and it's 15-minute relative equal lows. We're in close proximity to it. We came up and we swiped this little short-term high in here and we broke down. And if it trades lower, we are in a position where we could capitalize on that. If it stops out, no problem. I'll wait for it to break down again and it gives me another fair value gap. If it gives me another fair value gap after being stopped out, if I get stopped out, okay, stopped out. Now I have to wait just simply, if it gets back below the low in here, of the rejection block, that candlestick's closing price. Any movement lower than that, it doesn't need to create the lower low here. We don't need to pierce that. Every single instance that a fair value gap forms, okay, every single one, which I missed this one here. I would have used this one with a stop loss right above here. So in fairness, for the exercise and the drill, I would already be filled in here on a short with a stop loss right above this high. But I wasn't able to execute on that fast enough because I'm talking. But what you're doing is you're looking for every instance of, and that would be a stop out, every instance of a fair value gap, and you're engaging every single one of them, with you aiming for a particular pool of liquidity or inefficiency, something that's given you some kind of directional bias. If it's directionally driven like today, it makes it pretty easy to trade on one side of the marketplace. But there's going to be days where you go in and you're practicing and it's this range bound. And that's actually the better times to be trading with your drills. Let me see if I can do something in here. We already filled that one. All right, let's see. Those look smooth, do they not? And there's a minor buy side liquidity pool here. So let's do this. And stop loss here, and we'll aim for, man, TradingView is lagging. Everybody must be doing paper trades. We're all fading you, ICT. That's good. All right, so this is the fair value gap, and we're just trying to go against the grain here. And add this to that, and this. Come on. Good grief. There we go. So all we're doing is aiming for this little tiny little minor buy side liquidity pool right there. And if it goes there and really rejects and starts to sell off, that means that we could probably see that 15-minute relative equal lows get pounded, and maybe even go lower. How about that? But I feel like I've lost something today. Like I've always enjoyed having not done any executions in front of you live. I mean, I've done them before. You all know I've done it, but you've never seen me do this many of them in front of you. And I kind of feel like minor buy side liquidity. I feel like you're going to want me to do this a lot, and that's what I've been trying to avoid, because I don't want to do these types of things, because it's better for you to be in here doing it yourself. You're not going to learn anything by me doing it. The only thing it does is it creates codependence, and I've seen this in my own private mentorship students. Look at that. See that? Good old Phil. It's all right. Wait till you see what I do in the PM session, motherfucker. So there you go. It came down, wicked through, stopped, and then ran to the target. Now think about what that feels like right now. What does that feel like? If this was a live trade that you were trading in, would you be angry? Would you be mad? Would you be stop talking to me in the Telegram channel, or I will ban you? All right, so now we have this little gap right here. Look at this one here. See that one? All right, so we had buy side taken, and now, again, lagging. Useless trading view. You're fucking useless today, okay? How's that for affiliate marketing? This is some lame ass shit. There you go. I'll show you this in a second. What the fuck? The stop's not even adjusting. I just dropped it and it still ain't populating. Unbelievable. Oh, thank you. I could have made fucking breakfast in the time it took that. So if we have the low here to this candlestick's high, you see that? What I'm doing here is showing you the difference between the high of this fair value gap here and here, and it's 50%. So my stop is at the highest point, because if this is an inversion fair value gap, it should never breach the halfway point. But for Caleb's abilities, he's not going to know that. He doesn't have enough experience seeing it. So by having it run up to just half of that gap here, and the gap looks like this. It's this one right here. And then take it off. Yeah. So what I'm saying is inside this little area, allow me to take the execution officer for a second. I'll put them back on in a moment. This is an inversion fair value gap, and it's already delivered to half of this wick. So that would be a partial. And then this low here would be a partial. This gap in here could be a partial. Consequent encroachment here could be a partial. The new low here, that would be obviously a partial. But entering on the inversion fair value gap, when it has a gap like this, you have to look at the midpoint or consequent encroachment of the gap above it. Because think about like model 2022, how if it has two fair value gaps inside of that price leg that displaces lower, it can always, you have to afford yourself the ability to weather some kind of a delivery into the higher fair value gap when you're going short, like this case here. So the stop would have to be above the midpoint. So to reduce some of the risk, we'll go right at the consequent encroachment, because we've already had enough movement lower. If it comes back and stops me out, it's no problem. It's one more transaction. But you're seeing, and now we're below here. So I'd like to see that one support price to the downside if it trades into it. It can wick through it a little bit, but I want to see it kind of roll out and attack these lows and get down into this imbalance there. So back inside the inversion fair value here. Remember, partial would have been at consequent encroachment. Every time we see a big large wick and we're in a trade and it trades down into it, consequent encroachment of a wick is always a potential candidate for a partial. And in the beginning, every single time you do that, like it would be here, you would be partialed out with something, 1. And then if you get below this low here, that'd be another partial. Here's another. And all you're doing is just simply mapping out price, having fun while you're doing it. You're not trying to be critical of yourself. And that's not the right color though. All right. And I would like to see it get real heavy in here and try to displace below these 2 relative equal lows in here and back below that 60-minute discount consequent encouragement. Most of the questions you guys ask, motherfucker. And you'd screenshot that as a partial. Motherfucker. Post another one, you're banned. I just fucking told you guys to stop. What the fuck? And another partial would have been inside this gap here. And then now the stop could roll to cover costs. We want to see speed. And if it goes below this one here, it goes below that low, we still have to deal with the consequent encouragement of this mid gap, or mid wick rather. Does any of this look familiar? Like, does it look like the things that you see me doing in my recorded videos? It's the same stuff. I'm just picking the better entries. But I'm showing you everything that you could consider and how you factor all that stuff in. And you're never going to learn how to do this until you get in here and you practice like this. Annotating, screenshotting. And doing it every single day. What the fuck? There you go. There's the speed we're looking for. That would be a partial, and we want to see it drive down into the take profit, which Trinity's done a really good job of fucking around with today. Let this be something for your tech team to be working on, folks, because you can see I'm live streaming this stuff, and it's not working well. My concepts are working well. I'm admittedly fucking raging right now because I've asked my private mentorship students to stop posting in the channels that I don't want to toggle off to do the little mute button. But I just had to go in there and raise hell. And I'm pissed off because they kept doing it. So the 15-minute relative equal lows are the top of that blue shaded area. And there's another example of I'll never trade live in front of you. There's the executions. And none of this was done with market replay. That's how you do it, Tito. That's how you do it. What the fuck? Listen, I am live streaming. My alerts in here are on. Every time you fucking post here, it's appearing in my live stream. If I see it again, I'm banning you. I've been very clear about it. Stop posting until the live stream's done, please. Now, you understand that? The fuck? Okay, so you tell me, is this something that you think would be worthwhile for you to do with your demo account? Now, I'm not saying you're going to be able to be this good at reading it. You're not going to be that good at it in the beginning. Caleb's not going to be that good in the beginning. But you're never going to get to be able to acquire the skill set to say that you are good until you get in here and you experiment and you practice and you practice and you practice and you practice. You ask me, how do I know these things? How do I know this? First of all, you have to have a baseline foundation of what it is that you're going to be expecting in price action. You have to predict price, folks. That's the reality of this, okay? You have to predict price. We're not reacting to shit. I'm waiting for something that I'm waiting to see form. When it forms, I'm engaging it. I'm selling into it when it's going up. I'm not selling when it's going down. I'm not chasing price. I never fucking chase price. Twitter has a real big fucking bitter pill to swallow today, okay? They have a real big fucking pill to swallow. And I hope they fucking choke on it. Because this is an everyday instance, every single day instance where looking for the things that I teach and price gravitates to them. We wanted to see these 15-minute lows traded to yesterday. No problem. Not a problem at all. It delivered the next day, but there was trades taken in my students group, in the free students community. I mean, everybody was basically copying what I was outlining yesterday in the NASDAQ, and they were sharing it. And admittedly, that kind of pisses me off because if you want to make your trades on that stuff and you make money off of it, keep it private. Don't tell me about it. Don't at me, okay? Because it gets in my head and screws me up. Like right now, I'm pissed off that my private mentorship group, one of them has, it's very simple. If I say stop posting in the channel, like what the fuck are you in there doing that? I'm live streaming. I'm literally teaching right now. What are you in there conversing about? You should be watching, paying attention. You're in there fucking chit chatting. And the fucking alerts popping up. I'm fucking raging right now. I'm literally fucking fuming right now. I could spit fucking nails. All right, so I done lost count where we're at now. How many do I got to do to get to 10? We have 1, 2, 3, 4, 5, 6, 7. I got 3 more to do. Let's see if I can lose this $3,100. All right, let's see here. We've wiped out the 15-minute relative equal lows. Let's do this. Let's do this. Go over to, let's go to a 15-minute chart real quick. All right, and yes, it's ugly. Let me take this stuff off for a second. So here's those relative equal lows. We traded down to that. That was what I was trading. we have this low, and let's examine that low, see if there's anything in here we can use. Are you having fun today? Isn't this fun? It's all fun. It's just drills, okay? It's exercise with a purpose. All right, so we have this inefficiency right there. Okay, and we're inside that right now. So the next order of business would be rejection block there. And then the actual low. And if you want extra credit, you can do the consequent encouragement of the wick there. So there's our next three key levels. And that would look like over here, these. Okay, and all I just did was wrote down on my notepad these individual levels and just shorthanded little notes as of what they are. Rejection block, 19,894.5. Consequent encouragement, 19,877.5. And 15-minute low, 19,860 even. Okay? And then we can go back and add all this bullshit back on here again. And just simply watch. We have the weekly buy side unbalanced, sell side efficiency, consequent encouragement level down here at 19,883.25. We have a volume imbalance in there. That could have been used for a short exercise as well. This right here. And then the volume imbalance right here. So now let's practice with that in mind. Like we're going to use really low towards the low of the day, low probability, but unfinished business down here. We have weekly buy side imbalance, sell side efficiency, consequent encouragement. Stop loss. And then target right before getting to that level. Okay. It's not a fair value gap, but I'm just going to show you because I'm getting pissed off sitting here. And I want to get through the exercise number that I was supposed to go through 10. So now we're at 8. Now the volume imbalance being treated as something bullish. See that volume imbalance right there? I'm using what this market's giving me. It's not giving me a fair value gap yet. So first presented fair value gap today was a banger. Beautiful, beautiful, beautiful. above consequent encroachment of the wick. Okay, that's 9. I got one more to go. We have a fair value gap here. Low. Let's see if we can try to make a run onto these relative equal highs. Easiest way to get over your fear is to simply just get in here and press the button and just submit to whatever it's going to do. And over time, you'll get better at reading price. You'll get better at seeing the ones that you would really like to take a trade on. Everything improves with time. It's not going to feel comfortable doing it in the beginning. It's going to feel like, what am I actually doing here? But over time, you'll get to the point where it's just a matter of like a meditation. Like you just meditate doing executions, pushing the envelope of getting in, getting in, getting in, getting in, getting in, getting in, with no fear or expectation of the outcome. You're just looking at price gravitating towards a level that you think is going to be magnetized for price. It's going to draw to it. It doesn't mean you're right. It doesn't need to be right. It doesn't mean that you are a bad trader if you have more executions that get stopped out than winning executions, because it's an exercise. When you go to the gym, you work out, you go there for 2 weeks. Are you at the weight and the physique that you wanted to do or have at the time when you first started out, to have the goal of wanting to exercise and improve your wellness and health? No, of course not. But by doing those things, you're going to do what? Move in the direction of getting to that goal. And you have to have some kind of structured approach. And going in and attacking pools of liquidity, going in using fair value gaps, every single one that pops up, engage in it. Just use it. Just get in there and pop it and just trade on it. And what will happen is you'll get better at doing it over and over and over again. And you build this affinity for what the market's doing at that given time. Okay, hopefully that makes sense. It may not make sense to some of you. It may sound like a bunch of bullshit, but the bottom line is there's nothing there. I'm not afraid of pushing the button in front of all you. Okay, I'm literally just reading every tiny little minor fluctuation without any kind of rhyme or reason, except for here's where it could draw to for stops, and here's the right now fair value gap, and the right now fair value gap is not always the right one, and that's what you get by doing this. You find out the ones that work because you've done enough of them. You've seen enough of it. Okay, so give me a second here. I think I did 10, didn't I? Did I do 10? One, 2, 3, 4, 5, 6, 7, 8, 9, 10. There you go. 10 of them. The net result's $3,575. The 1, 2, 3, 4, 5, 6 negative transactions inside of 10 transactions of drills, not highly selected trades, not high probability entries, not the ones I want to trade on, but I'm forcing myself to take as the market's moving around. If it creates a fair value gap, I want to see it draw to a particular pool of liquidity. That's what we watched today. That's all we watched today. Okay, that's all it is. And when you go into your demo account trading and you use it like this, it gives you now a baseline. Now you can't use today's as your experience because it was me doing what I was doing. Okay, I was making the decisions, doing all this today. not you. So what I want you to do is go forward with this. And if you can, if you have the ability to do it today in the afternoon, try to do it where you're going to engage with a 15-second chart or 1-minute chart and take as many executions as you can. You want to use a 1-minute chart, as the highest time frame, because the 1-minute chart is going to give you lots of opportunities to practice. The 15-second chart will give you even more because there's a whole lot more price delivery, and there's lots of fair value gaps that form on this time frame. There's lots of little pools of liquidity, little short-term highs, little short-term lows, and whatnot. So it gives you a great deal of framework to practice in. It's a perfect little laboratory experiment, and it hopefully, if you use it this way as a coaching mechanism for yourself, like you can do your own measurement of progress by doing this every single day. Now, what time was my first execution? 9:30 something, right? No, over here. 9:51. Is that right? I think it, no. Here you go. All right, so 9:36. All right. I didn't do anything earlier than that. No, I did. Yeah. There we go. 9:26. 9:26, and then stopped out there, and then I used the first fair value gap of the morning, and then look where it was there, to all the way down to the relative equal lows. That's how you take your framework in your exercise and say, okay, which one of all the trades I was in, which one was my best one, which one was my worst one, and which one was the closest one in line with what actually delivered the best in the price of trading. And you can see that, it's pretty good, isn't it? It's random. But trading down to where I told you yesterday it would most likely reach for, and we're in that now. So next order of business is that weekly buy side balance, sell side inefficiencies, consequent encroachment. And that's volatility pinball. It means you're buying and selling using every fair value gap that forms on a 15-second or a 1-minute chart, and you're going to run with that to a old high or an old low. That's all you're doing, and you just practice doing that. I promise you, it will feel weird doing it. It'll feel like you're wasting time. It'll feel like you don't know what you're doing. Why do this? Why do this? When you start getting a baseline measurement of what it is that you're measuring, and I want you to think about me aiming for these relative equal highs, and then trading up into the consequent encroachment of that wick right there. You see that? Look at that delivery, and then down into the low here. You're not going to find that in your Elliott wave shit. Okay, you're not going to find that. But just when you come to my videos and you watch my live streams or whatnot, or you read my Twitter posts, I have a great deal of fun, torquing up people that love to hate me. I'm convinced that not all of them really genuinely hate me. They like to get a rise out of me, and I don't mind. I like to reciprocate and give a little bit back to them. There's the consequent encroachment on the buy side balance, also inefficiency rather, and it's for sport. Okay, I'm not losing sleep over anything anybody says about me online, because I know what I know. I know I can trade. I know I've made millionaire students. I have profitable students all around the world. I have new students coming in learning right now with you, side by side, and they're learning right along with my son. So when you see, I guess it's like, what are you here for? Because if you're here just to poke fun, that's fine. I mean, I'm not going to block you because of that. But if you constantly take what I said out of context, I'm going to mute you because you're not being honest. You're not reporting back what really was going on. Like today, there's no doubting it. Now you've seen it. Okay, there's pushing of buttons. There's a net result at the end that even if you look at that, that's not my real result. My real result would be simply taking that first fair value gap entry and then adding more to it here, pyramiding there, and pyramiding into that. And I don't want to go so far as to say I'd be in this pyramiding that, but I would have been out in here. And all you gotta do is look at my trades and see that that's how I trade it. That's how I do it. And when people say, you know, do it live, do it live, do it live, I know really what you want to see. You want to see it so that way you can copy me. That's really, really, really what you want. And I really, really love denying that because it's problematic for me. Okay. Um, I can trade without any emotion when I know that I'm the only one in there. When I'm by myself and no one is aware of what I'm doing, I feel confident that I'm I'm equipped to measure the risk and to incur that risk. If I'm wrong, I'm willing to be wrong. But I'm not willing as a mentor, as a teacher, to allow you to assume greater risk than you really should take on. And what does that mean? I'm certain that some of you probably did some of these things today with a live account or a funded account or a challenged combine, something to that effect. And I'm dreading going over to Twitter just for that. Not because of anybody else that might have something trolling to say, because I don't know what the fuck they're going to troll today, because it's pretty much obvious now. But I, I get I get nervous. Okay, I'm gonna be real honest with you. I get really, really nervous when I know other people are risking money on the things that I'm doing because I don't have that fear. I don't look at my transactions as I'm going to lose money. I'm going to hurt myself financially. I don't feel that. And when I see other people telling me that, thank you, ICT, you're the king, high five, and it's showing me their trade that this took, and I know that that was based on what I just said in a live stream, my stomach turns in a knot. Like, that makes me emotional about what I'm going to do next. And I don't feel that otherwise. I'm like a psychotic killer. I'm zero of emotion. I have nothing. I'm blanked out in emotion. Like I don't have any feelings when I'm trading. I have zero feelings. But if I know I have students around the world that are potentially putting real money at risk behind that, now all of a sudden my mind moves from the process of watching these candles do what I want them to do to now, are they being smart enough to take the partial off here? Are they freaking out when this retracement's occurring right now when I'm not nervous about it? Think about how what it was booking price back here. I can take these off now. When price was trading here with the inversion fair value gap, and I was talking about how price can use the same effect that we seen and I taught the 2022 model, you know, the one the kid just made $1 million of. I supposedly just watched one video. Dude, be honest, man. This higher fair value gap there, because it's there with this inversion fair value gap. Remember I was teaching yesterday about the inversion fair value gap. It's got to trade away from it and then come back up. And you want to see the body stay in the lower half, but it can wick to the upper half of it. Now, in this case, what is it doing? It's wicking outside of that orange box. Is that normal? In this instance, it is. Why? Because I called your attention to this fair value gap because it's a similar idea that having two fair value gaps stacked up on the distribution side of the curve here when it's going down, it can stab up into that. So your stop loss has to be making an allowance for the market to trade up into that. But how far can it trade up into it? It needs to stay below the upper half or the midpoint here. And you can see it does that. So there's no reason to fear, you know, doing it wrong because there's enough winning trades out there to fix all that stuff. And they repeat a lot. And you saw me do a lot of trades executions here today and using a 15-second chart. I was buying and selling and even forcing myself into situations where I knew it was low probability. But you're able to see me call it, why it should do what it should do when it's on side. That's the takeaway. I told you where it's going to go to yesterday. We traded to it today. I would be completely done with the morning session and I would close my charts. And that's what I'm going to do today. I'm going to do that now. So I hope you learned something today. I hope you had fun doing it. I hope you've been inspired to practice with your demo account like this now. Don't be discouraged if you're not doing these type of setups, if you can't see these things in the beginning. That's a byproduct of you practicing and studying ongoing. That's what you get over time, Caleb. You're not going to get like this just the first few times that you start doing it, but still submit to it every day. And over time, how much time? Months. You'll see progress in a couple weeks, but you'll see notable progress in 2 to 3 months. By doing that as a natural progression of working towards refining your skill, being able to read price, using limit orders, always limit orders, always limit orders, always limit orders, not marketing in. Not marketing in. If you're using a market order, you're rushing, you're being impulsive, and you're probably being emotional. And the only time that is invited and allowed is when you're trying to hurry up, protect your money. If you feel like something's amiss, something's really wrong, it's easier just to close the trade and just be out of it. Just do that. Move to the sidelines and mark it out. Just get out. But entering a trade, you should never, ever, ever, even though you've seen a plethora of me entering my trades with a market order, because I'm using these hot buttons up here. Again, I have only been doing that to show you that it's not market replay. Okay? So clearly we saw executions today only on the basis of limit orders today. Only limit orders. And I'm going to leave it to you all as the community. Okay. Do you see any value in having this as a exercise? Do you have any reasons why this would not be beneficial to someone that would be trying to learn how to do what I teach? Because you have to do stuff when I'm not talking. In between, when you're watching videos, what are you as the student in the making? What are you as the person trying to learn how to do this? What are you doing? What are you bringing to this journey? Because if it's just ICT talking to you and I'm entertaining you and hopefully communicating something that's useful to you and engaging your attention, if that's all there is to it, then you're never going to get good at this. You're never going to make money with it, and you're never going to be able to pass these account fund challenges you put forth in front of you. Because this is the stuff you have to do. This is all part of it. And if you don't recognize that, if you don't see it for what it is, then you're wasting your time. I'm not wasting your time. I'm not giving you stuff that doesn't work. I'm giving you stuff that absolutely works. And as much as you think it's too much to listen to and too much to go through, you look at all those videos over there on that YouTube channel. 500 plus videos, man, or whatever it is. I don't even know what the count is. But you don't have to watch all those videos. If you just start with the 2024 mentorship, I'm literally giving you a hand-holding session as best as I can over real-time price action, just like I was when I was doing mentorship. Nothing here is getting deleted. Nothing ever gets edited. The live stream goes up on the live stream section of the YouTube channel as is. Anything that I've said incorrectly, anything that I've done wrong or incorrect is still in there. That's exactly how it was for me on my paid mentorship. That's exactly how it was. I've never edited anything, absolutely nothing, to make myself look good. I don't need to. All I got to do is be myself and I look good. So you either find value in this and you come back tomorrow, or you go somewhere else. It's simple as that. Okay. I have no problems doing executions. I have no problem teaching you how to do it. I have no problem showing you the history tab when it's beneficial for you. But I like to make sure that there's nothing in my mind that's distracting me. And in my mind, if I worked for TradingView and I had the ability to put something on my account and I could link it to some kind of trade copying service, I would absolutely fucking do it. And I don't care if it risks being fired, because if I could get a week out of it, fuck it, I'm doing it. I'm going to do that. Because I'm sure TradingView ain't paying the kind of money that someone doing 15 contracts in a funded account setting, because my stops are tight. Everybody else that uses those 15 contracts, they have no idea what the fuck they're doing. They're over leveraged. They have no idea what price is doing, and they're blowing out. That's why these guys that are influencers are always resetting. They're always fucking resetting because they do not know how to fucking trade. But they're in there influencing you. They're influencing you to do what? To buy more resets. I'm teaching you how to do no more resets. You just do one. You get your money, make real money with it, and go into a real brokerage account and trade with one contract and build up. When you have 1.5 times the full margin, then you add one contract. That's proper risk management. That's how you do it. That's how you really, really do it. And it's not about, but I can't make these 5-figure and 6-figure payouts. You're playing the lottery, man. That's not what trading is. Trading is about making consistent progress and income. Let time do the heavy lifting. You think that you getting in there trying to get these big windfall victories, that's the answer to your problem. And what you're going to do is you're going to create a new monster in you where nothing satisfies you except for that. And what happens when you can't do it consistently? You're going to blow up. Now contrast that with Cool Hand Luke. Comes out, says, I'm going to listen to ICT. A lot of people say a lot of shit about this man, but he just come out here today and proved it once more, live stream entries and exits and everything. And I believe he's been proving with his executions that they were legitimately done with the concepts that he's taught. And I used it again live today, even in a drill setting. And it still does better than most of your guys that you're watching on live stream. I'm telling you what the market's going to do. And when they're staring at the fucking chart, trying to figure out what the fuck it's doing. Well, maybe it's going to go up to the VWAP. Maybe it's going to do this. Maybe it's going to do that. Well, let's see if it does this. Fuck that. I'm going to do what I want to do. It's going to do this. And if I'm wrong, no problem. It's giving me more intel. I'm going to do the opposite or sit still and wait for the next setup. I'm not reacting. I'm anticipating. I'm predicting the future. And you have to have that as a goal in mind. You have to discount all the other shit that people say that the market is random, because it's not, that you have to react to price. Okay. If you're reacting, you're always in second place at the best. That means the person in the front of the line, you're reacting to what they're doing because they're the winner. Second place is never winning. It's never, ever winning. It's never, ever winning. They only have the same perspective, and the view is the ass of the guy that's leading. That's the best you get to see. And you want to be the lead dog. You want to have the view in front of you. Everything's in front of you, wide open. Wherever you want to go in trading, that's what I'm giving you. I'm giving you that. You have all the freedom in the world to take whatever PD array. Like, I'm using just the fair value gap. Just the fair value gap. But if you go in here and you look at just order blocks, the same thing. You practice, you do your price action exercises and drills using volatility pinball. This means you're just going every time it creates it. You don't try to put the emphasis on this is the right one, this is the wrong one. Every time it happens that you think you see it in the chart, engage it. Engage it. Engage it. I missed a few of them in here because I'm trained to look for the right ones. So I have to go in there purposely and try to fuck it up a little bit, because if I go in here and just trade, then it doesn't serve the purpose of what I'm trying to show you here, is where you don't want to have to demand that you're right all the time. And when you have less experience than I have, and you just start, I'm reminding you, I'm giving you the permission as your teacher, as your mentor, that it's normal for you not to know what you're doing. And it's also normal for you to feel uncomfortable doing at all, any of this, because you don't know necessarily what it is you're doing. Doesn't matter. 10, 15, 20 executions every single day. Takes you about an hour, maybe an hour and a half at worst. But the time that you invest in doing this pays dividends that you can't even imagine, because it gives you the eye to see the ones that are the right ones. How do you recognize that, ICT? Because I fucking have seen them thousands and thousands and thousands of times within market delivery, within a present idea that I have for higher time frame, where I believe the market's going to trade to based on the economic calendar. All those are factors, but you can't get that answer that satisfies you in one post in a tweet or one sentence, because you're asking for something that can't be accomplished with something so small in its capacity or bandwidth. Like you're asking for something that needs a novel to justify why it's better to do it this way than what you're probably going to do if I give it to you in a short condensed version. Here's the short condensed version, and watch how you wreck yourself. Ready? High probability, successful, profitable trading is done by simply understanding where the market's going to go to next at the right time of the day. Knowing where a high probability retracement is likely, but not to go past, so you can use a stop loss to lock in that underlying risk. And know in advance where there's potential levels where you can take partials along the way, removing the necessity about being correct until you get to your terminus. That's it. I just told you everything that my concepts do. Now, that's a huge void to fill in. What do you mean by that, ICT? What the fuck's a partial? Where do you take a partial? Where do I put a stop loss at? Where do you frame a high probability trade? When is it high probability? Well, you first have to determine when it's low probability, and that's what we've been focusing on. That's how I opened up every new mentorship. Every single time a new group was brought in and I started a new year, I started with them looking at, here is high resistance liquidity profiles. This is problematic conditions. And it just seemed like to people that wanted to find any excuse, oh, this guy doesn't know how to trade. Let me get the fuck out of here. Give me my money back. Get the fuck out of here, clown. Get out of here. I guarantee you, those people that quit in 2016, the very first fucking group, some of them actually did come back in to 2018, 2019 group. Some of them actually did come back in. But the ones that quit and then never went back to try to get back into mentorship, I'm sure they studied the leak content. But I promise you they didn't do any well. They probably have either quit trading entirely or have lost money to the degree where it's probably warped them because they're chasing, give me money, give me trades right now. You're a fraud unless I see you making me money. Put me in trades or you're a fraud. And to those type of people, I have a very simple statement. Go fuck yourself. Because I don't owe that to you and nobody else does either. I didn't open up a signal service. I taught price action, how to read price. I can stand out here every single fucking day. I can do it in a courtroom. I can do it in front of the Supreme Court. I can do it on a fucking TV. I can do it under a fucking lie detector. I can do whatever the fuck you want me to do, okay? If you want me wearing fucking a different color jumpsuit, I'll do that too. I can fucking break dance and fucking do it. I don't give a fuck. I'm not going to forget how to do this. But what is astonishing is every single time I do it, you get amnesia, like it didn't fucking happen. Like you didn't see me do it today. Because you want me to get riled up and say, well, watch this. I'm going to prove it. I'm not doing that. I know what you are doing. I know exactly what you're doing. And I would want to do it too. I would want to get me all goaded up into thinking I got to come out here and prove myself every day. So that way you can copy me. And that's not going to happen. I have this economy. I teach you conceptually. I prove it with real-time examples. Okay? I proved it with real money in real accounts, not just in paper trading. When I'm teaching it, I have to do it in a paper trading account because the protection that it affords me, because I'm not acting or operating as a financial advisor, which is very, very important to me because I am not loving the idea of teaching you so much that I'm willing to open myself up to liability and pretending to be a financial professional that would tell you what to do with your money. I'm not like that at all. So I teach with a demo account. I teach with a paper trading account. And because this is all live real-time data, and you're all watching your own real-time data too, you know what I showed you today, and every time I live stream is absolutely 100% fucking factual and true. I am not afraid of anything. I'm not afraid of any market condition. I'm not surprised by anything. I'm not taken back by anything. I know what I'm looking for, and if it doesn't give it to me, that's okay. I will wait and I will take it later. It's simple. It's very, very simple. And that sounds like arrogance. That sounds narcissistic, but it's just confidence in knowing what I know. And my students that get really good at this, that's a byproduct of it. You're never going to tell them they don't know what the fuck they're doing. They're going to laugh in your fucking face. And if you come at them, don't be upset when they break your heart and tell you you're full of shit. And they're going to be quick to say, you put yours up against mine. That's how you know they're one of mine. Because one of mine will walk a fucking mud hole in your ass. Simple. So hopefully, like I said, you had some information given to you today, something that was useful. This is Volatility Pinball. It's an exercise where you go in, whatever PD array, okay, whatever one that you like. Don't let me feel like I'm forcing the fair value gap on you, like I'm doing my son. Like Caleb doesn't have a choice in the matter right now. Later on, once he proves he can do it consistently with the fair value gap, if he wants to start doing another PD array, have at it, son. But right now, you have to start somewhere. And starting somewhere is where everybody has to, you have to start somewhere. And it gives you a baseline experience. And then it's all up from there. It's all up from there. It's never, I'm getting less experience by doing more of the same thing. No, you're getting more experience. And by going out here and engaging the uncertainty of real-time price action, engaging the hard right edge, not knowing what the fuck's going on. Think about that. Think about that. John Q. Public is looking at this chart right now. Maybe not on the 15-second chart, but they're looking at that chart right now and they're thinking, what the actual fuck is this thing doing? Like, what is going on? Where is this thing going? I gotta know. Like, I'm down, I lost money. What the hell am I gonna do here? And here we walk this pony. In here, I told you it was gonna likely go up to a level here, but not go past a certain one. It's gonna treat these specific levels in a manner that is defined already in pre-live stream today's lectures. That means you are aware of the logic, and all I did was lean on the logic that I've already taught you, and I used it real time. Folks, listen, okay? When I was trading Forex, they said, show me your MyFX book. Fuck you. Watch my live executions and my commentary. Because you can't fake that. You can't fake that, okay? You cannot fake that shit. MyFX book, absolutely faked. You can fake that shit all day long. Anybody that trades the Forex market right now, honestly, if they have never had an interest in going into futures, that's a red flag for me. Because that means they got to come out of MT4. That means they got to come out of their white label fake broker, their shell company broker. That means that they're showing you something that's fucking artificial and fake. And they're making money through affiliates and course sales. Simple and straight and forward. That's the way it is, okay? And if you don't fucking like that and you're one of those guys, prove yourself different. Prove it differently. You don't owe me any evidence. I don't give two fucks what you do. I'm not impressed by any of them. But for the people that are looking to them and sucking them off publicly, oh, I love you, King. Oh my goodness, let me give you a happy ending. Like, what the fuck? Man up. What, these fucking guys, okay, do not deserve to be worshipped. I don't fucking need to be deserving of any of that shit. That's why I strike it down. Nobody, only God gets worshipped. Only God gets worshipped. And some of these clowns walk around here and they want you sucking them off publicly. They want to be lifted up on a pedestal. And they want to put a price tag on it. Here, worship me and pay me this much money so you can do it. And they're lying to you. They're fucking defrauding you. They're literally lying to you and saying, look at this, man. I turned $100 into $100,000. The bullshit you did. Bullshit you fucking did. Okay? You're a fucking liar. You are a liar. Okay? You're a fucking clown liar. All you fucking Forex clowns are fucking liars because you're staying in an MT4 world where you can fake it. Come out into a real broker setting. Come out where you can't manipulate the bullshit, where you got to use the same data everybody else does. And then turn your small accounts to six figures in a couple days. It ain't going to happen. It ain't going to happen. And unfortunately, there's a whole new round of suckers and dumbasses that come in this industry. And if I was a piece of shit like some of you think I am, that lie and say that I am, I have the highest seat right now. I have the highest retention and viewership on live streaming. I have the biggest following in terms of people watching just for futures and ongoing education. And I'm doing it for fucking free. And I'm telling people, stop emailing me. I'm not doing paid mentorship. Stop contacting me through Twitter and asking me for paid mentorship. Stop leaving comments on my YouTube channel. Can I get into your paid mentorship? Can I pay for your paid mentorship? My paid mentorship is on my YouTube channel. It's in the 2016, 2017 playlist. That's all of my paid mentorship. Anybody that joined my paid mentorship after that got those lectures. That's it. So stop asking me, can you please take my money, ICT? Send your money to St. Jude. There you go. You want to spend your money so well? Send it there. That's a worthy charity. I support that charity. I'm 100% behind St. Jude. You don't need to say, I'm fucking loaded. I'm rich. I'm fucking rich, rich, rich. And the proof is, I'm doing this for free. I don't have a panhandle out saying, please pay for my fucking Lamborghini. Please pay for my fucking McLaren. Please pay for my fucking vacations. Please pay for my this and pay for that. I pay for everything out of my own fucking pocket. If I want something, I'll look at these fucking charts and say, okay, I'm going to do this, 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 and I'll make what I need to make. Done. Simple. Truth be told, I don't even need to do that anymore. I have enough. I just got to dip into what I have. I don't ever need to trade ever again. So who are you going to believe? Seriously, I'm saying this and I'm turning this fucking video off. Who are you really going to believe? The guy that's sitting out here saying, I don't want your money. You're never going to get another opportunity to send me money. I gave my stuff that I sold as education for free on the YouTube channel, and I'm teaching ongoing for free. I'm proving it in live streams. I'm literally pushing a button in front of you. I'm doing everything absolutely what everybody else is hiding and won't ever fucking do, and they're still selling courses. And they're selling my shit for more than 2 times that I sold it for. Who are you going to fucking believe? You don't think that they have a real vested interest in trying to make you doubt me? Because they have their sock puppet accounts pushing that narrative, that bullshit, because they don't want to lose more sales because I'm beating their ass. I'm literally squeezing their fucking nuts in a vice right now. They're squealing. They're hating fucking life right now. They're hating me. They fucking hate me even more today. And we're not done. Oh, we're not done. We are not done. But who are you going to believe? Seriously, who the fuck are you going to believe? There were some talkers that said they were going to join the Robbins Cup. Okay? Here's what happened. I went in the Robbins Cup and I told Joel Robbins, I said, listen, anybody and everybody that's going to come and contact you, you tell them exactly what my account's sitting at. And I sat there and I pushed and pushed and pushed and pushed and pushed and pushed and pushed, and I pushed that fucking account down to $900 fucking dollars. And I sat there and I waited and I fucking waited and I fucking waited, and not one of these fucking yahoos, no Vinny E. Minnie, because that's who I really fucking wanted. I really wanted Vinny to do that. I really wanted him to join. But circumstances panned out as they have. He's already been dealt with. It's done. It needs to lie. If he raises it up even more, you brought it on yourself. But that one never stepped. And I can understand why he never stepped. If he's smart, he'll shut his fucking mouth and let things lie. But if he stirs it up, I have every bit of the ammunition I can fucking do to make everything fucking painful. I never wanted to do that, Vinny. I never wanted to do that at all. But I told you, if you wanted to have a competition, let's have it in the Robbins. And I baited 2 other guys. 2 other guys. None of them made it that way. I could take that $900 and run it right back on up. But it's been bait. It's been bait the whole fucking time. The whole fucking time. And you're out here sitting there thinking, you're clowning me. I have fucking trolled and trolled and trolled and tried to get these guys to come out here, and they won't do it. Why? Because they have a mentorship. They have something they're selling. And the litmus test is this. Who the fuck are you going to believe? I'm out here proving my shit in the lens of everybody watching it live. Inviting them to come out into a setting where they have to prove themselves. Not just do sporadic once in a while live stream. Here, let me do something. I'll show you what I did today. Pre-recorded this, pre-recorded that. No. That doesn't work. I got very, very thick skin. Very thick skin. I have dragon scales, okay? There ain't a motherfucker worrying me. But I will go out there and rip my own image up just to drag these fuckers out here in the center and tear their throats out in public, in front of everyone. I went to great extremes to try to get these guys to do anything and everything in there to do something, and they won't. Why wouldn't they? Why wouldn't they? Why would they not want to do that? because they stand to lose their meal ticket, their mentorships, their services, their bullshit. Okay? That's exactly what it is. Every single trade, every single fucking trade that I put on in that Robbins Cup had nothing to do but anything except for me just pushing the button. Push, 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 push. I did that shit on purpose. There's no logic like you're seeing here live. You're never seeing that. And I have waited and I waited and I waited and I waited. Not one motherfucker stepped. Not one. And I thought for sure, I told my wife, I said, man, I'm telling you, I know as soon as they contact Joel and they say, look, he's in drawdown, they're gonna pounce on it. And that's exactly what I've been wanting. So now you know. You fucking know. You still have time. You still have time, you Jordans of the fucking trading, the master of fucking trading. Let's fucking go. Let's fucking go. You know what I'm starting with. You know what I'm starting with, and I'm still going to beat your fucking ass. So let's fucking go. I'm not afraid. I'm not embarrassed. I'm not intimidated. I'm not anything but fucking ready. And if you don't think you got enough time, we can restart this fucking shit for the 2025. There you go. But I wanted to be pushed. I wanted to be fucking challenged. And the only way I could challenge myself is to put myself in such the lowest point. I could not come any lower than I am right now. I can come back from that. I can come back from that. You can't. You can't. But I fucking can. And I wanted to fucking rub it in your fucking face because that's just what an ICT would do. So there's your facts. There's your skinny on what's going on with the Robbins Cup. You don't believe me? Contact them. They'll tell you. All it was is push, 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 push. No rhyme or reason. I just want to draw the account down because I knew Vinny Minnie was going to contact. I know his little blow boy, Curtis, would be calling and contacting. Hey, ICT is lying online saying he's winning the Robbins Cup. Could you verify that, please? Oh, certainly. Let me take a look. Yep. Here's where his account is. But none of those motherfuckers stepped. Not one of those motherfuckers stepped. Do I sound like I'm intimidated or scared? Do I sound like I'm embarrassed? Fuck no. Like I said, we can still do this year. We can still do it. Absolutely we can. Brent could move aside and let the man go through, and I could be at that number one spot. But I want someone to dance with. You guys promised me. You said you were going to fucking do it, and you didn't do it. Of all the years I've had people come forward, I thought for certain the M7 guy was going to do it. I was confident that he was going to do it. He didn't do it. Not my circus, not my monkeys. Come on, man. I got excited when you popped up here and you said it was a clerical error. I thought that was shit. Yeah, now I got somebody. Nope, I don't have anybody. And Dave teaches bullshit. Forget about it. That fucking guy's a fraud. Fucking clown. He would have done it if he could do it. Period. You need a full year? The invitation is again for 2025 if you want to do it. If you can roll what you got right now by the end of the year, I will use what I got. And you can verify it with Joe Robbins that not one motherfucking penny will be added to that account. Not one fucking penny will be added to it. And I'll still whip your ass. Now, how humiliating would that be? With less than $1,000, I came back. The fucking rookie sensation ICT comes back with a fucking surprise upset. The October surprise. Woo! How about it? You ready? I'm ready. I am fucking ready. Listen, I have worked very hard all year long, biting my fucking tongue, hoping that you'd say, you know what? I got his ass finally. There's no way. There's no fucking way he can come back from this. Because if he adds money, he broke his rule. Yep. But not one of these guys came forward. Not one of them. But they got engagements and they got people talking. But you don't see them out here proving shit. You don't see them out here doing it for free. You see people saying they're full of shit and wow, ICT is finally doing it for real. Look at it. Look at it. There it is. Yep. There's a global cup right now going on. It's going on till the last day of May of 2025. We can slide right on in there. I already got approved by Iron Beam. All I got to do is fund the account. If you say that you're going to go do it and you just get on the 5th spot, that way I know for certain that you're really going to make an attempt to do it. And I will absolutely beat Larry Williams. But you stole something from me for this year. Like, I literally wanted this to happen. I really, really wanted it to happen. It would have been so much more fun if you guys would have participated. But you didn't. And that kind of, it irks me. It irks the fuck out of me. So, here we are. We're sitting here watching ICT prove it live. But some of you just simply aren't going to like me. You're not going to believe me because you didn't win the Robbins Cup, ICT. Your reputation's at stake. My reputation has always been a demo trader. How the fuck am I going to wreck that? Think about it. And I'm not here for reputation. I'm here for fun. I'm here for fun and entertainment. If this stuff didn't work, I wouldn't be out here live doing it. If I couldn't do it, I certainly wouldn't be out here trying to do something I don't know. I know how to do it. And I love playing the strings of all these people here that talk shit about me. I love it. I came back to Twitter just for that purpose, for that very reason. And some of you are going to ignore what you watched here today. You're going to ignore everything I'm proving this year in the mentorship that's been given to you for free, because you're going to look at a pewter trophy of a bull and a bear that I don't hold in my hands yet. But do you honestly, okay, seriously, sincerely mean this, okay? Do you think it's hard to make 400%? It's fucking easy. And that's all that's going on right now. That's it. And you need me to do that, and you're ignoring all this evidence that's being shown to you beforehand. You're going to ignore this, and you're going to point to that, because that's what trolls are going to do. That's exactly what trolls are going to do. And you're either going to join that bandwagon, and you're welcome to do it. I'm just going to have more people that's going to make me laugh and smile, and none of that shit bothers me. See, you all would be hiding under a fucking rock. You would delete all your social media. You would never go online again. That's what you would do. But I'm in control of everything I'm doing. I know exactly what I'm doing. I am absolutely in control of what I'm doing. And I am teaching things that work in real time. I'm proving it. I'm proving the logic. And I'm also willing to be in any competition, but I got to have competition, folks. Like, I want the competition. I want that. I don't want to just, yeah, I want it. What the fuck? Big deal. I wanted these guys and anybody else that was sitting on the sidelines thinking, I'm going to fucking go after this guy. I'm going to go after him and I'm going to do it. And nothing happened, really. It was a lackluster all year long, a couple 100%. That's all you ever saw. That's easy. I'm going to show it to you this month. I'm going to show you this month it's easy to do that. I don't need to win the Robbins Cup to know that I know how to trade. But some of you think that that's the litmus test that says, see, he's a fraud. Because I gave you that invitation to think that. I want you to think that. Because that means I'm going to divide the crowd like I always do. And if I have a divided audience, that means I have a talking audience. And a talking audience is going to, what? They're going to advertise for me. And it brings more people here and more students learn. For free. For free. So are you someone that's going to ignore everything you're seeing here that's being done live? In a live stream, executed point blank, buttons are pushed with a limit order, not market replay, telling you why it should happen. And we've been doing it for 8 weeks now. Telling you what the market's going to do, candlestick by candlestick. Is that value? I don't know. For some of you, it might not be. For others, it might be, this is a fucking amazing opportunity. I don't give a shit about Robin's Cup. I don't care if you ever do Robin's Cup. I intend absolutely to do Robin's Cup, but I have to do it the way I want to do it because I only want to do it one time. And I thought I was given the opportunity this year to do it, and I did not get any competition because it's not enough to me just go out there and beat my mentor. I want to have something else to hang my hat on. And I just thought it would be great to be able to show the world that here are individuals that were in our community, in Twitter, in FinTwit, and they were willing to step in there with me, regardless of the outcome, and they really weren't. And nobody would come out here and say this stuff if it was happening to them. If it was by some circumstance or lack of ability, they would just disappear. I'm not that kind of guy because I want you to still doubt it and say, I'm going in and I'm going to do it. Great. That's exactly what I want you to do. And if you lose to me, it's not anything to be bad or be bad mouth about. No one should troll you if you lose. If you really get in there and you get on the leaderboard and you really try to do well, but you still fall victim to me winning it, that's not something bad. That's exactly what's going to fucking happen. So you shouldn't be surprised by that. Nobody would be, really. But I would love to champion the idea that you had the balls to get in there with me. And that's what's lacking in this industry. Nobody's willing to put their reputation on the line. I will absolutely burn my fucking reputation to the ground and kind of like a phoenix come right back out of that shit. Because I can. I can do that. What do I have to lose here? Some subscribers, some people that don't want to watch my videos, somebody's going to leave a trolling comment to me. That's not going to make me forget how to trade. That's not going to make my students that know how to learn how to read price action to eventually learn how to make a profitable trade and do it without me coaching them, without doing anything to tell them where the market's going to go. That's not going to make them forget or somehow think, oh well, I don't want to do this anymore because he didn't get a pewter trophy. Think about it, folks. You have a line in the sand in front of you. Did you get into this to learn how to trade and make money, or did you get into this to worship somebody? I'm not a hero. I'm an anti-hero. And you never, ever, ever want to meet your hero. Never. I'm in my villain arc right now. Okay, in case you haven't noticed, this is the villain arc of ICT. And I'm having a lot of fun with it. Lots of fun with it. But at the same time, I can be helpful. I can teach. I can show you how it's going to help you and make your decision-making process about trading and investing more direct and without going through a lot of the stuff I had to go through. It doesn't mean profitability. It doesn't mean that your profits are guaranteed. It doesn't mean success is guaranteed. It just means that through my experience with teaching lots of people and my own personal experience, these are the best ways that I think that someone should go around learning how to do this. And if they aren't willing to come out here and sit in front of the world like I'm doing here and explain to you why it should be beneficial to expect this or that, to push a button live, explain it, why it should take place, then they're not worth paying. They're not worth listening to. Their course isn't worth shit. Their sermons aren't worth listening to. Their wares are not worth purchasing. All that stuff. It's all bullshit. And drama marketing, listen, I'm a master of that. All I got to do is start a fire. I can start a fire easy. I just started one today. Twitter's going to be ablaze with this shit. And guess what that means? More people are going to come and they're going to want to talk and they're going to watch and they're going to watch me do what you just saw me do today, but even better. And they're going to be like, fuck Robbins, this guy's doing exactly what I want to learn. I don't give a shit what he's doing. I don't care about Michael. I just want to hear what he's teaching. I care about that. If that can make me some bread, that's what I'm all about. That's the right mindset. That's the person that's passed the test. That's how you know you graduated, because it's not about being tethered to me. I want you to be able to say, you know what, Michael, I appreciate everything you've done for me, but fuck the fuck off. I have a life to live now. I'm going to go out there and I'm going to make money and catch you on the flip side. If I see you, I see you. That's the right mentality. That's the mentality that I want all of you to have. Not hold my hand, ICT. Guide me. Stay my guru, ICT. Fuck that shit. I don't want that. You shouldn't want that from anybody. You want to be independent. You want to be independent thinker. You want to be independent trader, devoid of any outside influence. That means me or any other influencer. Think about it. Isn't that really what you want? You want to be able to do these things on your own and not have to worry about listening to long-winded fucking videos, studying this one and studying that one. You'll know what you know and you'll be able to implement it. That's why I got into trading. I wanted to learn how to make money. I love Larry Williams as a man, as a mentor. He gave me the best head start in the right direction. But I trade with very little of his stuff. But the impact he had as a mentor on me still has lasting impressions. Like it surfaces all the time. But it's not the technical stuff. It's not to go into the market and trade with this way of stuff. It's how about this is how you think about it. This is how you should think about it. This is how you should approach it. And I don't agree with everything he teaches. I don't agree with a lot of the things he subscribes to. He doesn't believe in an algorithm controlling price. He believes it's buying and selling pressure. And that's my first real mentor. You don't see me trashing him, but I trash the idea and the logic that these markets are absolutely random into buying and selling pressure, because clearly, as you've seen here today, I would not know this stuff. It was random buying and selling pressure. If it was what that was, then I should have been stopped out up here. And I wasn't. But I was able to outline exactly what it should do and how it happened. I should not be able to know that that first fair value gap in between 9:30 and 10 o'clock should give you an enormous edge in terms of timing when the market's going to roll, and it did. And I'm in it too. And here's the first one back here. So when you read these people leaving comments, oh, do it live. I did it live, but you'll forget about it. Anybody can do this. Do it live. Okay, show me anybody that can be this precise. It's simple. Show me. Show me who that is. And until I talk to you tomorrow, be safe.